It's a sunny day in North Carolina. I like that. Good morning, Cav. Good morning, Bob. Gonna be a good day. Hey, Better Dad. Good to see you in here again. Good morning, Miss Jen. Or good afternoon, Miss Jen. Excuse me. Like that. Just a quick questions. So the instructions are just for the prop firm. Your actual cloud-based platform is still coming soon, correct? Yes, Josh, the programming is not quite done. John is hoping 2 to 3 weeks out. So everything is TradingView right now. And Chef, I know that NinjaTrader was having challenges. There were a couple people that were talking about that, and I don't know what it was, if it was a server down. Um, well, so Chef, you can get with Jason and see if he knows the fix. I think that's worth a try. For sure. Cav, you're still waiting for help as well. It's something with NinjaTrader, guys. I don't know what it is. I saw people talking about it yesterday. I don't know if it's like a rolling blackout or what. So Josh, TradingView, it's not that it's gonna be replaced, because one of the things about TradingView, remember that the prop firm isn't Nexgen software. And that's a big thing. So TradingView and our relationship with AMP, there's like a 500,000 people that use TradingView, at least. I don't remember what the number is, but it's astronomical. So we're trying to reach out to everybody, to be able to work with everybody, to be able to come through and create an opportunity, not just for the people that have and use Nexgen software, but for all traders. There's about 10 different platforms that you'll be able to use with the prop firm. But right now, TradingView is the largest, most used platform out there. John Novak had programmers and himself write as many of our indicators to make them look the same on there. John and I spent weeks working on a plan so that we could put something in your hands if you guys wanted to trade TradingView. Good morning, Izzy. But the ultimate goal is to have that next gen platform, which is going to have the entire suite, everything we offer, market flow, fibs, all that good stuff. So it's not that it's a replacement, but you've grown up on NT8, you've grown up with that full suite with fibs and all the good stuff. You'll probably be more comfortable. It's the same thing. So the next gen platform is the same thing. It's the same look. It's the same data. It's the same triggers. It's the same fibs. So it's not that I'll be teaching one over the other. I'll be teaching the exact same patterns that I've been teaching for the last 5.5 years. The only difference, Josh, is that you'll be able to put your favorite bikini on, sit on the beach, and make money on your iPad instead of having to be chained down to a desktop. So, guys, it's exciting. There is so much exciting stuff going on. John Novak and I have been going non-stop this morning, back and forth, talking about everything and going through, and I'm trying to break this darn TradingView. And what it turns out is that I don't read directions so far. Everything's working pretty flawless. He's got a big meeting at 10 a.m. today with the programmers to start ironing out the short list. There's about 8 clients that are beta testing right now. And then hopefully after today, we're going to turn all you guys loose on it that want to go. So really exciting stuff. And just so you can see it, look at that. Isn't that pretty? Next Gen Pro Trader funding. So excited, guys. So excited. But let's get to work, because, you know, we got to work, right? Here we go. forexfactory.com/calendar. Why did I choose not to trade at 8:30 a.m. this morning? Because there was high impact news. High impact news. So it happened to be unemployment claims. At the risk of sounding disinterested, I don't care that it was unemployment claims. And I couldn't care less when it's non-farm employment change. And I have no skin in the game with ISM services. I'm looking for these red boxes, guys. High impact expected. What does that mean? That means that somebody with deeper pockets than me might make that market spike, become untradeably fast, change direction on a dime when they get the news. So I just choose not to trade. There's a lot of prop firms out there that'll tell you you are not allowed to trade during news. You're not allowed to ride the wave, hope for the best, go long, go short, see which one wins. So this is just an awareness piece. This is when the market may react, and reactions can affect patterns, guys. And all we're doing is we're learning patterns every day, over and over. Going to the Nexgen website. The pattern that I talk about each morning can be found right here in the trading guide. And in that trading guide, I'm going to go to the frequently asked questions, and I'm going to scroll down. And I'm going to show you exactly what we're going to do for an entire hour this morning. We're going to focus on the high probability trade. We're going to learn the 3 simple rules, how to identify them, how to study them, how to enter the market with a trade that typically wins 70 to 80% of the time. Because a high probability trade, it's defined when each indicator on every chart agrees with the rules for the trade. What a great feeling. Each indicator on every chart agrees with the rules for the trade, guys. This is when triggers are the strongest. This is when there are no termination conditions. There's nothing between you and your target. This high probability trend trade is a foundation trade. It's a stepping stone. It's the first trade. It's not the only trade, guys. This is the trade that creates a lot of confidence for new users, because this is the trade that typically wins 70 to 80% of the time. One of the things that you'll find if you're brand new coming in, you're like, he says it's simple, but it feels like I'm drinking from a fire hose, and that's normal. Right around day 3 is when the verbiage clicks. Right around day 3 is when your brain takes a deep breath, slows down, and you start to see this pattern. And Better Dad, you are an awesome example of that. A couple days, a few mistakes, a little bit of feedback, and yesterday you were killing it. And that's the key, guys. That's exactly what we're doing, is we are taking this foundation. We're learning the very basics, giving ourselves the best of the best. And I'm going to put in your hot little hands a plan that has been proven to win more than it loses. So you have something to follow, something that gives you the potential to be profitable while you expand your knowledge with the software. The high probability trend trade is going to open your eyes to the rest of the trades. And I'm going to give you a plan as well for what we call a medium probability trade. And this is when most of your indicators line up, but there's a little issue, guys. And you're going to learn how to manage those assertively to take quicker profits. The whole reason, the only reason that we start with this high probability trend trade is because it's going to teach you to read your charts. It's going to teach you to read your indicators. You're going to be able to look at your charts, and you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. You're going to use these concepts to make sure that you have an edge, to make sure that you have an advantage when you're getting into the market. So the high probability trend trade is going to teach you to understand what your indicators are telling you. And what you're going to find is that about 90% of your day is waiting for those advantages, waiting for an edge, waiting for a pattern that's been proven to win more than it loses. 10% of your day will actually be trading. Chef, it's never a problem on the side chatter, man. If you guys have things to say to each other, one of the great things about this room is the community, and you guys all tend to look out for each other. I love that. We're going to focus on this trade. We're going to learn to read our charts, and you guys are going to realize that 90% of your day is not trading. 90% of your day is waiting for these 3 advantages to come into play. These advantages, momentum, clear path, and entry, are what you get when you follow rules. So rules, I like this. This is my new phrase. Rules are a description of a pattern that has been proven to win more than it loses. So rules, when true, provide an edge. They provide an advantage. They give you a statistical advantage entering that market. So rule number 1 gives me the advantage of momentum. And rule number 2 gives me the advantage of a clear path. This should be your focus for a couple days, guys. Focus on being able to identify momentum and focus on understanding what it means to have a clear path. Once you have those two, you literally have everything that you need for a profitable, consistent trading plan. Once you understand momentum and path, it opens all the doors and it starts to keep you a little busier than you were when you were focused on the high probability trend trade. These three rules happen on only two charts. And again, I'm going to kind of harp on the first two. The first two rules, the advantage of momentum and with nothing in the way, comes from that first bar on a large chart. Because this large chart's it's a big chart, it's a slow chart, it's a very broad stroke of a brush, it's difficult to see change on. So we insist on being able to recognize the trend, the direction of the market, the momentum, and the areas that could be problematic on this large chart. Rule number 3 gives you the advantage of entering where the large chart's trend is most likely to continue. Rule number 3 is specific to a trend trade, and rule number 3 is going to happen on this smaller chart. And I want you to think of it as a refinement chart. Inside of one bar on this big slow moving chart, there's 20 to 30 bars on this small chart. You're going to see retracements, these pushes against the trend. You're going to be able to pinpoint where the market is most likely to continue. You're going to use Rule 3 for entry, and it's going to allow you to reduce your risk and increase your profit potential. So only 3 rules. 66% of your advantages come from the large chart, and if you don't have momentum and your path isn't clear, brand new users, there's no reason to go to the small chart. We're using these two charts because they are a reflection of who you're trading with or who you're trading against. In the world of trading, we are all 73-pound weaklings. I want you to realize that. Nothing you do will ever create a trend, and nothing you do will ever change the direction of the market, and nothing you do will ever create enough momentum for the rest of the world to ride that wave. So what we do is we trade with the people that have that power. We trade with the men and women that create the trends, that establish the momentum, that react at those key areas. So the large chart leads the way because the large crowd almost always wins. The small crowd, your small chart, there's that refinement. These are the people that believe their poop doesn't stink, that think they can change the world. And they can't. They don't have the money to fight these guys, but they have just enough money to create what we call a retracement or a pullback. And this is a fight by the small crowd. And rule number 3 on that smaller chart is designed to get you in right where their failure is most imminent. And they typically lose 70 to 80% of the time, which means when you trade with the large chart direction, when you trade with the large chart momentum, when you assume, or not assume, but insist that the large chart have nothing in the way, we're just going to capitalize on these guys that like to fight, and you're going to be able to enter the market where the market is most likely to continue with all of the advantages that the large crowd have provided. My day is the same every day. The first hour of this classroom is the same every day. There's people posting pictures in the room. Just in case you're new, I want to remind you that we're going to look at every chart posted. We're going to talk about them. We're going to break them down. We're going to look for the good, the bad. We're going to I'm going to give you guys ways to avoid challenges. And that's all in the second half of the classroom. Hey, good morning, Black Prince. The first hour is dedicated to learning the trigger line and the Fibonacci rules for when it's okay to trade. And there should be one reason to enter a trade. Because my rules are met. Because my rules have been proven to win more than they lose. You guys have the ability to simulate. And I think this is amazing. You know, it used to be, you old farts, you remember when it was paper trading, right? I'm going to write down where I would have gotten in, and I'm going to write down where I would have gotten out. And I'm going to gauge my progress before I actually put money in the market. Guys, now you have a simulator. You can trade actively in a live market. Practice your rules. Focus on having the correct rules. Get in, get out. Get real world results to see how you're doing following your plan. It's amazing that we have this now. But what you also have is the first step in becoming a confident trader, and that is posting your trades, posting everything that you do into this classroom and getting feedback. Because every time you post a picture, and I'm going to go to how I would love for you guys to annotate a picture. Every time you post a picture, you're going to do a couple things, guys. There's a little bit of work to get the best feedback. You're going to tell me what you saw. You're going to tell me why. And this is such a big part. Tell me why. Why did you enter that trade? Why did you exit that trade? Why did you put your stop there? The more whys you give me, the better the feedback will be. So strong triggers, potential to break, entries, exits, I want to see all of that. And I want to see it not because I don't know what you're thinking. I know what you're thinking. I know what you're doing. I know what your indicators are saying. I want to make sure that you know what the indicators are saying. And when you write the whys, what you're doing is you're creating a recipe to make the good trades repeatable. When you take the time to write out why you got into the market, if it's the perfect trade, now you have the recipe to repeat that, to do it often, and to also, if you're writing the whys, if there's a mistake and we correct it, now you're writing a recipe to avoid those losses that are avoidable. So take the time to write on your charts. Please, please, please. We're going to simplify. I was talking to someone this morning, and they told me, we talked about just setting up these areas, and he goes, man, your way to do this was 1,000 times easier, and it feels more effective. And I'm not trying to toot my own horn, but that's how my brain works, guys. My brain is a brain that focuses on simplicity. My brain needs the fewest moving parts, and my brain tries not to worry about the things that aren't important. And that's exactly how I teach this first hour. We're going to focus on what's important. We're going to focus on the ideas that get you in the driver's seat the fastest, and this simplicity is the easiest way to do it. So I'm going to put in your hands a plan that's been proven to win more than it loses, that focuses on great entries, that teaches you very, very mechanical management. And your job is going to be to learn the looks. You're going to have to know what looks you're going to commit to, because it's just a pattern. You have to learn those Fibonacci and trigger looks so that they're easy. And that's the second piece to becoming a confident trader ASAP, guys. I'm going to give you this spreadsheet. I give it in the room every day because I update it almost every day. I steal your trades almost every day and fill out the spreadsheet. But the first tab is going to be the most important tab for you guys. The first tab is where you're going to commit those first two looks to memory, those first two rules, that advantage of momentum through strong triggers and that advantage of a clear path because there's no termination conditions. So you need to learn these two to open the doors for everything else. That's what the first tab is. This is what it looks like to have your first two rules met. And this is what it looks like when you're supposed to sit on your hands and do nothing in that 90% phase because you don't have strength or you don't have a clear path. I'm going to give you something to really utilize that. Second tab is the client trades. Over 400 pictures of you guys using momentum and path to capitalize on a market. Over 400 pictures of you guys recognizing the pattern, dropping it in my room, annotating your charts, and me saying, wow, that's amazing. Let me steal it. Let me liberate it from this person. Let me drop it into my spreadsheet. And now other people can come in and they can take this trade and they can see this pattern and they can study this pattern. Guys, this Nexgen community is making your study easier by providing these pictures. There's the entry sequence, pinpointing where the market is most likely to continue for both long and shorts. Management ideas, very basic initially. This will be on your written plan. And then ideas when you can hold a little bigger, a little stronger, a little more, or when you should be getting out. And then the one thing that I wanted to post in this, or I posted in the room earlier, and I wanted to talk about it. Patterns that repeat, chart reading. When identifying momentum and path becomes easy for you, you're going to see more in the market. You're going to see these different patterns that can help you, that maybe hurt you. And I put one in the room this morning, and I wanted you guys to see this. And if the market doesn't reverse from a key area, very often the trend continues. And it's just a pattern, and we don't have to get into it right now. But these are the kind of things that you're going to start to recognize on a bigger scale as soon as you get to the point where the first two rules become easy. So take a lot of pictures, go to the build your plan. Everything in green should be your pattern, complete, start to finish. The one that's going to win more than it loses. And you're going to have 50 of them. And every morning you can take 5 minutes and look at each picture and drill that image into your head. You're going to learn how to manage, and you're going to begin to see things, guys. The people that take the most pictures and share them in my room are the people that get to where they want to be the fastest. And then finally, here's your trade tracking. Trade tracking is your trade journal. And there's 4 slots. Take a picture, put it into the spreadsheet, guys. How to annotate for the best feedback, how to get them into the spreadsheet. Even the capture software, if you can't seem to find that TechSmith capture on your computer, re-download it. It'll give you the icon. You're going to get feedback on everything that you present in the room. I don't care what kind of trade you're taking. It doesn't matter to me if it's high probability or low probability. I don't care if it's counter trend. Everything that you post in this room, we're going to talk about momentum, path, and entry, and you're going to get the best feedback that I'm capable to give. You'll begin to see things that repeat themselves. Maybe you're trading in determination conditions and you get that feedback 3 times in a row. That is your aha moment. That is your light bulb over your head saying, whoa, this is something that I need to stop. This is something that's hurting me. This is something that's costing me money instead of making me money. And when I presented that in the room, Mark gave me feedback on how to avoid it. So now that's what I'm committed to this morning. I'm committed to avoiding the challenges that aren't making me money. And guys, if you do this every morning, if you come back and you look at yesterday's trades and you say to yourself what worked and what didn't work and what felt easy and what felt forced, you're going to begin to recognize these patterns. And when you post in my room, it takes me 3 or 4 pictures typically to recognize patterns in you. We had a great example of that yesterday where somebody kept telling me that their path was clear, but it wasn't. And we went through it. We talked about the whys. We used a couple examples. We cleared up misconceptions, and now they're going to be a better trader today for it. So this little brief historical study, guys, it's going to set you up for the day. It will accelerate the learning. I have made every mistake that you will ever make. And I figured out how to fix it. Better Dad, you don't ever have to admit it when I call you guys out on the slide. So this is going to be our morning, guys. And my promise to you is that I will give you everything that you need to be successful with the software. I will hand you every tool that you need to study, to recognize, to piece together, to create a trade. I'm going to give you a plan to enter, to exit, everything that you need. The only thing that you have to do is realize that the software is a tool. You bought the world's greatest hammer, but if you don't learn how to swing it, you're not going to be able to build a house. So let's look at the pieces of the puzzle. What are we looking at when we open up? And guys, I know I've still got some new people in here, and I've got some people that are coming back. So when I ask things like, hey, does that make sense? I want to hear from you guys that are new. Let me know. Give me a why. Give me an N. Give me the opportunity to clear up anything that you need clarity on. Every chart has triggers. Every chart. Both charts have triggers, large and small. And we have large and small triggers, guys. Your small triggers are 2 solid lines that work together. They're a fast-moving average, which really isn't important. And no matter what chart you're looking at, small triggers will always look like small triggers. You also have large triggers. They're a slow-moving average. And no matter what chart you're looking at, large triggers will always look like large triggers. You don't have to know anything other than the difference between the two. You're going to use trigger lines to define momentum. You're going to use trigger lines to define termination conditions. And you're going to use trigger lines to define entries. So just know the difference between the two. Each chart has areas. Areas, for the most part, are just horizontal lines that run from left to right. There are divergence highs and lows. These are magenta and cyan lines. They will print off of a pivot if there's a loss of momentum. So anytime you hear divergence, Write this down. Divergence equals loss of momentum. That's it. That's all you need to know about divergence. You don't have to know how it's calculated. And I'm going to tell you guys, this negative number is a byproduct of the calculation, has no impact. Divergence is like pregnancy. You either have it or you don't. And if there's a loss of momentum, you'll see the magenta line or the cyan line. You'll see red Fibonacci resistance. You'll see blue Fibonacci support. You'll see yellow 1-to-1s. And you'll see this exponential moving average. And that is what we call the midband. And the midband, when price is above it, will be green. It may behave as support. When price is below it, it's magenta. It may behave as resistance. And better, Dad, those pink 1-to-1s are the little sibling of the yellow 1-to-1s. And unless you're a NASDAQ trader, they are irrelevant. So that's one of the things I'm going to tell you, learn how to ignore. Small swing 1-to-1s, guys, they are tiny little movements. They're tiny little projections. And unless you're trading a big chart like the NASDAQ, they really don't come into play. That's okay. Are you really colorblind? Okay, so have you figured out how to determine the background colors? You're okay with it, with trigger line location? You don't have to know the colors if you know the looks, but every now and then I get a colorblind person, and just not what I see. Okay, cool. So you're creating your own roadmap. I like that. Guys, these areas on a large chart can be problematic. These areas on a large chart are where the large crowd are making decisions. On a small chart, we're going to use them for entries. So let's get into the rules. And again, I'm talking to all my newer people, you know, Better Dad and RO, and who else is in here kind of new? JK, I know you're back coming in. Jerry, guys, don't be shy if there's anything that I can do for you. Don't be shy if you need a little clarity. So rule number 1 says that the large chart must have strong trigger lines, that the large chart must have that advantage of momentum. So let's go through, and now I have a little bit of guilt, Better Dad. The background color will determine the trend. Oh man, now I feel bad. So much for inclusionary stuff, right? If the background on your large chart is green, the market's going up. If the background is red, it's going down. You're looking for rules to be met that follow the trend, that go with the flow, because the large crowd created this trend. Strong triggers is mandatory. It's rule number 1. This is my favorite advantage. And in an uptrend, strong triggers means that the small triggers have broken above and away from the large triggers. The large triggers are wide. They're in the angled in the direction of the trend. And it's that space that's created between the two. I like you to picture scissors that are opening up. And when scissors are open, when there's space between the blades, you can cut. You can get some work done. So strong triggers is just that separation between small and large. Here's a little cheat code. The colors have to match no matter what colors you see. In a downtrend, the smalls are below the large. The large are wide. They're angled in the direction of the trend. And once again, the space created between the two, that is your strong trigger look. When those small triggers return to the large triggers, when the scissors close, that's weakness, weak triggers. I'm a big fan of language, guys. This is strength. This is weakness. Use the words. When I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. When I have weak triggers, anything could happen up or down. This is a very clear advantage. This is the advantage that I want if I'm going to put my money on the market. Because when the odds are favorable, guys, that momentum is hard to stop on a big chart. When I have odds favorable momentum, it has the potential to break those key areas. Guys, when I have odds favorable momentum, this is when I'm going to buy Fibonacci support on that smaller chart, or when I'm going to sell Fibonacci resistance on that smaller chart. This is always the look of rule number 1 being met. When I have anything can happen triggers, man, literally anything can happen. You start to see these retracements from the middle of nowhere. This is when key areas tend to hold. And the absence of momentum is just that. It is a still lake and you're stuck in the middle with a sailboat. So when I have strength, when I have separation, when there's that divide between the two, on your large chart, anytime price goes below the midpoint, you see one of these tails or these wicks. Does everybody remember that small crowd fight that I talked about, that little push that they create? That's what it looks like on a large chart. You can't trade that. You're going to use rule number 3, and you're going to be able to pinpoint right where these tails are most likely to form. And you can use this as a study, because if you go back historically and you see all that momentum and you see one of those tails, circle it. You can go to a small chart and see if your rules were met for entry, and that's a great way to create recognition of that pattern. So let's see if I own a large chart over here. This is the NASDAQ, which is absolutely psychotic for new users, but the rules are the rules. And when there is separation, there is strength. And when there is separation, there is strength. Can you guys give me a why if you're with me? Separation between the small and large means that the market is likely to continue in the direction of the trend. That's it. And a lot of you are saying, but Mark, look at that strength. Why did it go down? But Mark, look at that strength. Why did it bounce up? Yeah, we call that a segue, ladies and gentlemen. Because the market reached a termination condition. The market got to one of those lines that could stop it. The market got to one of those places where the large crowd is most likely to make decisions. So rule number 2 is designed to keep you from trading directly into those. A termination condition is just that Fibonacci-based indicator that may, might, could, has the potential to reverse the market, stop the market, create an untradeable bounce. And it's just a comparison of the area, support, resistance, one-to-ones, divergence highs and lows, versus those T3 trigger lines. The same trigger lines that create momentum will tell the story on whether or not you have a clear path. So the one thing that I really want you guys to remember is that decisions are made at key areas. That's going to come into effect all over the place. Decisions are made at resistance. Decisions are made at support. So the first step in identifying a termination condition is letting the market get to the line. If the market is trending up, if the buyers are in control, the trend is up and price reaches Fibonacci resistance, if price reaches a divergence high line, if price reaches a yellow one-to-one, the only thing that you have to do is ask yourself, where are my triggers? If the triggers remain below, it's a termination condition. And what that means is that it could produce a big untradeable bounce that could pull you out of a long position if you choose to trade into that line. There could be a fight between the large crowd buyers and sellers, which means that there may be a boatload of indecision that could take you out of multiple trades if you try to predict what that's going to do. It could break. Areas break all the time, typically with momentum, or it could reverse the market. And I'm going to tell you right now, price reaches the area. Once it does, we're done with price. No more. Don't care about it. Doesn't matter. Once price gets to that area, the burden of identification is 100% on the trigger lines. The trigger lines will tell the story. All the triggers below, if that market reverses, we're going to call this a strong top. We call it a strong top because it means that when price got to that key area, the decision was so impactful, so deliberate by the sellers that they reversed the market and sent things screaming the other way. Any trend trade you take after a strong top to the downside has a higher chance of winning. Strong top, strong bottom, termination that reverses the market at a low. This is rule number 1 for about 3 different trades that I can think of off the top of my head. So once you learn these basic concepts, it will open the door for more trades. Price reaches support. You ask, where are my triggers? Triggers remaining above, no trades. You don't know what the reaction's going to be. Why try to guess, right? I want you to see this. Price reaches Fibonacci support. Triggers don't break. No short trades. Loss avoided. Price reaches a divergence high. Triggers don't break. Loss avoided. Same at support. Back to resistance. Back to support. Back to resistance. Back to support. Ladies and gentlemen, you are not the only people that know about these key numbers. What happened? Down, and then eventually we get below. Fibonacci support stops it cold, reverses the market, and the buyers took over right from a key area until they got weak triggers at resistance. And look at that, down it goes. Can you guys give me a why if you're good with the basics? Price reaches, where are my triggers? This is going to keep you out of a truckload of hurt, ladies and gentlemen. Areas break though. So let's go through the process, because this is really where I want you guys to be at every time you're talking about your rules being met. If price reaches resistance and the triggers remain below, I want you to learn how to be okay not trading into that red line. I want you to be content staying out of the market, because you'll never know what the reaction is going to be. And the highest chance of success, hey, good morning, Steve. The highest chance of success, longevity, comes from you not trading into that line. If it's going to break, both the small triggers and the large triggers, both lines of each, must be above that area of resistance. Once both sets of triggers are above resistance, resistance is broken. It begins to behave as support. And guys, your path will remain clear until you reach the next line. So brand new users, for your first week, it's either a termination condition, wait for the reaction, or it's a clear path. Let's look for rules to be met for entry until we reach the next area. And then there's the little transition from termination to clear path. So number 2 is what we call a 50-50 look. And it has nothing to do with the odds of winning the trade. It has everything to do with the trigger location. Remember, we're done with price when we reach the area. Triggers tell the story. If your small triggers absolutely smash through an area, and I'm talking like 3 or 4 points, and your large triggers are lollygagging, they're still below resistance, they haven't been able to break, as long as you have odds favorable momentum, as long as you have strong triggers, that resistance has the potential to break. It's not broken because the large triggers aren't above, but it has the potential to break. This is going to end up being most of your trades, guys. This is the second trade on the trading plan that I give you, because if all it is potential, rule number 2 is not met. There's your issue. And it means that you've got to manage a little more assertively, that you're probably going to take quicker profits, that you're going to get to a zero loss level a little faster than you would if the path is clear. So guys, give me a why if you're with me. When price reaches, it's a termination. Let's sit on our hands. If it's potential, what do you say we manage assertively if we find an opportunity? But man, if it's a clear path, that path remains clear right until you smack into the next area. And we go right back to number 1. This is the basics. I love it. This is large chart. Let's go look again one more time. Well, that termination condition held. It pushes back to support. Support holds. It retests resistance, and then it continues down. Has the potential to break. Now Fibonacci support is broken. Let's see if it behaved as resistance. There it goes. Nope. They head right back up to resistance. Triggers don't break. Down it goes again. I mean, come on, guys. Is there anyone that's like, oh, probably doesn't happen? See those tails right at the key areas? That's the fight between buyers and sellers. We're going to take advantage of that. And now here we are. Weak triggers right at a 1-to-1, and it created a big bounce. So that's large chart. That's it. Better dad, that's it 100%. So NASDAQ moves so fast, but let's do this. Wow, look at that. Was there news at 9:30? Did you guys see how fast that just moved? That was 6 seconds. That was 6 seconds. That's why new users don't trade the NASDAQ. So check it out. I'm going to do this. Price reaches Fibonacci support. I'm on the right side here, better dad. Do you see how the triggers are above? For me, no trades into this area. I'm going to wait for the reaction. When the small triggers get below, but the large triggers haven't broken yet, this has the potential to break because I have momentum. And then once both get below, that's your look, that's your clear path. And until I hit this divergence low, my path is going to remain clear. I'm going to look for opportunities. There's that divergence low. And do you guys think it's a mistake that it stopped the market to a tick? To the tick. And I want you to see from the very top, 9:37 and 27 seconds, 9:37 and 50 seconds. Guys, that is 23 seconds for a 60-point move, and it stopped to the tick on the divergence low. If you don't believe having these areas is the best advantage you could ever have, I don't know what to tell you. And now we're going up from the termination, and it reversed the market. It's a strong bottom. And it has the potential to break. And now it's broken. And once again, there's a potential entry right there. Do you guys see the tail? Not that anyone could trade that. That all happened in the exact same second. But even in a market that is screaming so fast, the timestamp doesn't move. And that is literally 25 points worth of upwards movement. And the timestamp is on the same second. On the same second. Cavs Superman. But there's your opportunity. And guys, it does it again. Strong triggers, pulls back. Off it goes. Weak triggers, deeper retracement. Weak triggers, deeper retracement. Large and small didn't break, deeper retracement. Straight into one-to-ones. That only had the potential. The potential didn't come through. There's your reversal. And I'll be darned. They just pulled back to resistance with every trigger line below. So let's learn the basics. You'll be absolutely floored at the advantages. There's another termination condition on that list, guys, and it's 3 divergences in the same price range. Does everyone remember the large chart's a big, slow chart? It's a broad stroke of a brush. It's hard to see change. Inside of this one bar on the large chart, guys, there's 20 to 30 bars over here. So the small chart will show you change you can't see on the large chart. It'll give you a heads up. 3 divergences, 3 losses of momentum in the same price range can terminate the trend. It may terminate the trend. It could, it might, it doesn't have to. Certainly has the potential to. So 3 divergences in the same price range is a termination condition. The only termination condition you're going to accept from that small chart. 3 divergences in the same price range can stop forward progress. You'll never see it on this large chart. The small chart will let you know that you shouldn't be going short anymore. Then you'll also see where the mid-band behaves as a termination condition. And there's only one look when it does. The large triggers are a full bar away. And guys, the separation between price and triggers, it acts like a vacuum. And you're going to use this concept for entries, for pinpointing entries. Price returns to large triggers. Price gets sucked back to large triggers. And when price hits an area, it's more likely to suck back to those triggers. So, no shorts, even with the momentum, because your mid-band is a termination condition. And guys, that's one that you see a lot. Let's see if the NASDAQ did it at all. Price hit fibs, large triggers, sucked right back to them. There's your mid-band, large triggers are far away, sucks right back, does it again right there. Even when the market is absolutely psychotic, this pattern is pretty true. Price hits a mid-band, sucks right back to the large triggers. PJ, it is a 21 EMA. It's part of the workspace. It's nothing that I teach. It has nothing to do with anything. And you know what? Let's just get that off of there. That's one of the challenges, guys. I'm not going to get it off there because I use it in my trading, but that's one of the challenges. You got to learn to ignore the things that aren't important. There it is again, mid-band, pulls right back to the triggers. Do you guys see that pattern? It's the same pattern. These are the patterns you begin to recognize, guys. And what does it mean? It means don't go short. Let it close that gap. Let's see what happens. One more thing. One more thing. There will be times when your path isn't clear because the areas are stacked a bit. Has anyone other than me started to get antsy because you can't seem to get a clear path? Start to get a little despondent thinking, man, I'm never going to make any money. There's all these damn fibs in the way. Guys, I've done it. You're going to do it. Trust me. This is 90% of your day. The futures markets trade trillions every day. There are billions exchanged every hour in the futures markets. You need to make $400 a day consistently to put yourself in a six-figure income. So the idea is that you never have to hope an area breaks. You never have to guess on whether or not you should take that next trade. You'll find your advantages, you'll find your edge with all that momentum in between the two areas. Trading away from one Fibonacci area, trading to the next Fibonacci area, guys. And this is the 90%. It's okay to do nothing. It's hard to do nothing. It's okay to do nothing. And the more you begin to trust your rules, the more okay you become with doing nothing. So, large chart has led the way for us, ladies and gentlemen. The large chart, we have allowed it to define the direction, and we have committed to trading with that direction. The large chart has given us the advantage of momentum through strong triggers, and we are committed to having that look on the chart before we ever look for termination conditions. And the large chart has said, hey, we have a clear path. Price has not reached Fibonacci resistance. My triggers have broken above the previous area. Let's go look for an entry. Is everybody with me? Large chart has given me 66% of my advantages. And I feel good. I want to get in that market. So, I have to go to the small chart. The group is making money on all the charts and you're just waiting. So Jerry, I'm gonna tell you something about that. And this is from my own experience. When I started with Nexgen, guys, I started with Nexgen about 5 years ago, and I didn't come in as a teacher. I did not come in as an employee, Jerry. I came in the same way you guys came in. I had just had, good morning, Junior. I had just had my second spine surgery. I had lost my career because I was out too long. It was a huge surgery. It took me 13 months to recover from. My job gave me 3. And my brother said, hey, it's time to learn to day trade. And I said, okay, let's do this. My last name's Novak. I'm going to be great at this. And Jerry, I went into the classroom, and my brother taught it at the time. And my brother told me the exact same thing I tell you guys every morning. He said, Mark, I want you to write down your rules, and I want you to take pictures of what it looks like to have them met. And most importantly, I want you to post your trades in the room, and then just keep track of everything you do so you can study it. And of course, I told him, my last name's Novak. I don't need to do that. I'm awesome. Have you met me? Alpha male, baby. Let's go hunt and gather. And I got my ass slaughtered, Jerry. And I watched people in the room making money. And I watched them making a lot of money. And I watched people posting a lot of winners. And I felt like I was doing something wrong. Nothing was obvious. I couldn't figure out what the hell I was supposed to be doing. So good on you for waiting. I didn't wait. I just took the wrong trades. And I got lucky every now and then. And I got lucky just enough to want to put 5,000 of my own dollars into an account and go be the badass that I thought I was. And Jerry, it took me 2 hours to blow through $5,000 because I had no idea what I was doing. So I like to tell people this. I like to share that story because if you're missing out, if you feel like you're missing out, if you feel like everybody else is making money, I'm going to tell you right now, the people that are truly making money, and not just the people, Jerry, that are only posting their winners, because there's a lot of you in here that refuse to show me losses and only show me winners. That's not the path to getting to where you want to be. But the people that are truly successful with this software, Jerry, learn the basics, and then they create their plan from the basics. So instead of worrying about doing what everyone else is doing, don't try to keep up with the Joneses, because each of the Joneses is in a different spot. Focus on momentum and path, and then the most important thing I can tell you is, Jerry, every time you say to yourself, that's not a trade, every time you look at a chart and you say, oh, that's not a trade, I want you to take a picture of it, and I want you to tell me why it's not a trade. I want you to say, Mark, I saw support and didn't want to take the trade. And what happens is this creates a myriad of lessons. Well, and Jerry, I'm not saying you would actually do this, but I would say, but check it out, Jerry. You've got all this room to the fib, and your entry is going to come from up here, and there's plenty of room to make profits, and there's plenty of room to manage. And then later you're like, oh, I didn't have to miss that trade. So yeah, keep them coming. And I promise you, I'll give you all the feedback I can. And guys, I know where each of you are in the process. And after 4 or 5 pictures, I know what we really need to work on. And that's the thing I get a kick out of. I get a kick out of watching you guys grow. So I appreciate the opportunity to see what you're doing and to help you work through challenges and just celebrate victories. And we can all do this. It just takes a little bit of elbow grease. So large chart. Thank you for sharing that, Jerry, because you're not the only one that feels that way. You're not the only person that feels that way. Everybody has felt that way. And that's why I teach this room on the premise that nothing is obvious, because nothing was obvious to me when I started, and I consider myself to be pretty smart. But nothing was obvious. I was like a 3-legged monkey in a dance-off, and it wasn't pretty. So Junior, the same is true for you. Start writing on your charts. Start writing on your charts. Put them in the room. Tell me what you see. And stop trying to be at the finish line before you ever lace up your shoes. Guys, we can fix anybody if you give me the opportunity to fix you. Squeaky wheel gets the grease. All right, let's talk entries. My large chart has defined the momentum and the path. My large chart has defined the trend. Guys, it's time to go to the small chart, and it's time to refine that one bar, and we're going to pinpoint where the market is most likely to continue. And we're going to do it with such accuracy that you're going to wait for the market to come to you with a limit order. And that limit order is going to be used to buy or sell the pullback, that fight created by the small crowd, that retracement on the small chart that creates the tail. And that limit order is going to be waiting at an area, at a fib, at a midband, or a yellow 1-to-1. The same way areas on the large chart could stop the forward progress of the trend, areas on the small chart can stop the progress of that retracement, can create a bounce point. But here's the deal. You want that area inside of triggers. So when you're writing your rules on a chart, it's important that you use that phrase. My entry came from the area inside of triggers. Capitalize inside, because price returns to the triggers. The same reason midbands behave as termination conditions, guys. Price may return to the large triggers, and it does it on a small chart and a large chart. So on your entry chart, you've got the large triggers from both charts. You've got the 5-1 and the 13-2 large. And the only thing these do is they define where the retracement is most likely to occur. They define where those down bars are most likely to go. And look at this, it happened again up there. So what happens is when you can define the retracement area, you're going to have less space where the market is most likely to continue. So large and synthetic define the most likely range for the retracement. So when those large and synthetic, those two large triggers are one on top of the other, that range gets even smaller. This is where accuracy comes into play. This is your best of the best look. This is what we call favorable large triggers. And favorable large triggers means that there is no deviation. There is no separation. Those trigger lines are one on top of the other like two snakes riding piggyback. And then when you put a fib, a midband, a yellow 1-to-1 inside of those triggers, you give the market something to bounce off of. You get something solid in there, most likely to create a ricochet right in that retracement zone. And guys, that's the magic of rule number 3. You're going to pinpoint where the market is most likely to continue. So let's do that real quick. Once the rules are met on the large chart, I really can't say that enough. When the large chart gives you 66% of your advantages, you're going to turn your attention to the small chart and you're going to find your entry. Your small chart is going to be screaming north, just like the large chart. Large chart's got momentum and a clear path. Everything says up. And this right here is where you guys start saying, oh my gosh, it's going without me. I better just jump in. Holy smokes, this market is never going to give me an entry. I'm just going to jump in. And then the pattern starts. The reversal bar prints, and the reversal bar signals the beginning of the pullback, the start of the fight. The reversal bar is not your entry, but everybody remembers because you wrote it down and you're studying it daily. Price returns to the large triggers. That's where it usually goes. You have large triggers and synthetic triggers, guys. So make a box. Either do it with the drawing tool, do it with your brain, take a crayon, write on your monitor. It doesn't matter. From the highest point of the triggers to the lowest point of the triggers defines where the retracement is most likely to go. What does that mean? That means at this moment, the only thing that I'm sure of is that price has the potential to go all the way to the bottom of those triggers. Does that make sense, everybody? We're just defining where it could go, not where it has to go. Trigger lines are not your entry. We're going to find the areas inside, because the areas inside define where the bounce is most likely to happen. So I know where the market may return. That's a big box. But it's most likely to bounce off of a fib, a midband, or a yellow 1-to-1 inside of triggers. There's that magic word again, inside of triggers. So what I'm saying is, even though I know price can go all the way down here, it's most likely to bounce from somewhere in that box. We call this the window of opportunity, guys. This is where it's most likely to bounce in the direction of the trend that's established on the large chart. This is where the small crowd is most likely to fail. This is where the bottom of that tail is most likely to form. So you're going to activate a limit order, which means that you're going to wait for the market to come to you. And you're going to do it 2 ticks above that highest point of support, that highest area inside of triggers, because it could go lower, but I don't want to risk missing it because that big chart is screaming. And guys, this is going to be the hardest thing you ever do as a new user, because it means that you are going to go long when the market is coming down to you on a smaller, faster chart. The market's going down. Why on earth would I go long? Guys, you would go long because your large chart looks like this. Strong triggers, clear path, nothing in the way. All you're doing is you're refining and you're pinpointing where those yahoos are most likely to fail. And if they get to you, you're in a long position, guys. You just bought the market. But here's the cool thing, is when you start to believe your rules, you're going to say to yourself, I'm in a long trade with the advantage of a market where the odds are favorable for it to continue up. And I'm in a long trade with nothing on my large chart to create a bounce against this trade. And I'm in a long position, having entered precisely where the small crowd is most likely to fail, where the trend is most likely to continue. And guys, this is the one. This is the one that typically wins 70 to 80% of the time. And you're going to be able to do this inside of your first week if you keep it simple. So let's go through the process again. Large chart rules are met. The trend is up, momentum is up, the path is clear. I'm done with the large chart. I come to the small chart and I say, all right, I'm not going to jump in. I'm going to wait for the fight. I'm going to wait for the reversal bar, but I'm not going to enter on the reversal bar. That's the beginning of the pullback. I'm going to define where the pullback is most likely to go. From the top of the triggers to the bottom of the triggers, that big old box is where the retracement may happen, but price bounces off of areas typically. So I'm going to create that window of opportunity again. From the highest area to the lowest area inside of triggers, pinpoints precisely where the trend is most likely to continue. Your job is to study it enough to develop the courage to put a limit order at the top of that window and wait for the small crowd to do their thing. By defining where the market is most likely to continue, you begin to understand where the market shouldn't go. So anything below those trigger lines, below the retracement zone, below the bounce zone, guys, this isn't part of the equation. Once price gets to the other side of those triggers, you don't know if, when, or where it's going to go up. Your advantage is gone. Rule number 3 is no longer met. One more, other direction. Reversal bar starts it, not your entry. Define the retracement zone using those large triggers. Define the bounce point using the areas inside. Activate your limit order 2 ticks below. And just taunt the small crowd. I dare you to push up. I will take this trade from the best of the best spot. And anything on the wrong side of the triggers is where my advantage is gone, where the edge is no longer present, where the market should not go. Those words become important because where the market should not go is where your initial stop is going to be placed, 4 to 5 ticks above those trigger lines. Some of you want to put it 1 or 2 ticks above those trigger lines. You know who you are. Guys, 1 to 2 ticks does not give it any breathing room. Remember, we're good, but we're not laser precision. These are moving averages. You may get a tick or two above it, so 4 to 5 ticks. Stop stumbling over pennies trying to save a few dollars. If the market gets through the retracement zone, if the market gets past all the areas most likely to create a bounce, you will be stopped out of your position, whether it's a long or a short trade. You will take a loss. You will lose money. Anything that wins 70 to 80% of the time is obligated through the laws of mathematics to lose 20 to 30% of the time. Losses are not failures. Losses are not reasons to beat yourself up. Losses are a normal part of a positive equity curve. So what we do is we focus on the losses that make the most sense. We focus on the losses that are a part of the pattern, that are a part of the 20 to 30%. And you avoid the losses that are not. Avoidable losses are a big part of trading too. I posted a picture in the room this morning of an avoidable loss. I broke my entry rule and I was punished instantly. And then when I took the correct entry, I came out of a $300 trade. Actually, it was a $350 trade. I was up $95 because I had to undo the damage I did by breaking my rules. So I'm pretty big on rule adherence, guys. This is your pattern putting it all together. When I have strong triggers and my path is clear, I'm done with the large chart. Can you guys give me a why? I want to make sure you're good with this. Every time I look at a chart, do I have strong triggers? Is my path clear? Is it only the potential to break? Is it a termination? I answer those questions. Guys, the market is trading all the way up here when you're looking for an entry. The market is trading all the way up here when you know it's time to wait for a pullback. Avoid the temptation of just jumping in. Avoid the temptation of convincing yourself that there's not enough room to get to trouble. Because what happens is when that reversal bar prints and the market starts heading down, your entry's all the way down here, which means that that $80 worth of profit potential turns into $300 worth of profit potential. If I jump in high, my stop still goes where the market shouldn't. I've got no room to targets, and I've got a metric boatload of risk. If I get suckered into, and guys, I see this a lot, it didn't hit my entry order, but it started to go up and I panicked. See this a lot. All you've done is increase risk and reduce profit. Guys, it's that entry at the areas inside of triggers. The bottom of this tail lines up with this. That's the least amount of risk. That's the most room to targets, guys. So I encourage you new users, focus on that high probability trend trade entry. Give yourself a couple weeks, 30 days, to be able to identify the best of the best. And the NASDAQ is absolutely psychotic, but just for grins, let's see what that momentum and clear path look like. Pull back to support right inside of the triggers. Can you give me a why if you see that pattern? Your job is to go back and circle tails. Your job is to identify entries. And your job, if you really want to get to where you want to be. Guys, I want you to answer for me. Did I have strong triggers on this chart? What do you think? We're talking about the bar where the circle is on the tail. Absolutely. Did I have a clear path? What's your butt? Strength is individual, better dad. You either have strong triggers or you don't. Show me your butt. What's your butt? I love the butts, guys. Great lessons come right out of your butts. Sounds funny. We'll let better dad type. Better dad, why are you looking at a small chart before you ever answer the questions for your rules? Comment. Strong triggers are a yes, right? What about the path, ladies and gentlemen? Do I have a clear path? Jerry says no. And Jerry, that's what I need. So we're going to go through this. To identify a termination condition. First, price reaches an area. So Jerry, did price reach an area? There's the top of the bar. There's nothing there, right? So we didn't reach an area. So now I'm going to look behind me. Did triggers clear the previous? Large and small. So the last area that we had was this fib, right? So all of my triggers are above the fib. I haven't reached the next one. Jerry, do you see how this is a clear path? I've already cleared trouble and I haven't reached trouble. So this literally is the greatest look we could ever hope for. And Jerry, I promise you, if you play along every time I ask these questions, you're going to get to where you want to be fast because we will clear up every misconception you've ever had. Cool? I love it. Thank you for that. It takes courage to answer questions in this room, guys. I know that it does. All right. Does everybody see we're done with the large chart? Go to the small chart. Look for your entry. Wait for the reversal bar. There it is. At the time of the reversal bar, better dad, I'm about to be smug. Not really. Let's define where the retracement is most likely to occur. Somewhere inside of these triggers, right? Price could come down to the synthetics. It could come to the large. I don't know which it's going to be, but I can define that range with the trigger lines. Is everybody with me? Whoops, that's not what I wanted. So first it's the reversal bar. Then it's defined retracement with the large and synthetic. So we've done that. Synthetic. And now we have to define the bounce point. Let's call it the bounce point. And do you guys remember? It's areas inside of triggers. So let's write that down. That seems to be a pretty big deal. Areas inside of triggers. So watch this. I'm going to take the top of my retracement box, better dad, and I'm going to go to the highest point of support inside of triggers. There's the mid band. And I'm going to take the bottom of that retracement box and I'm going to bring it up to the lowest point of support inside of triggers. It's the mid band. Ladies and gentlemen, there is one magical area inside of triggers most likely to create a bounce. My entry is 2 ticks above it. My entry is at 316. That's your entry. The bottom of this tail is the bottom of that move. And this is NASDAQ. 4 to 5 ticks is a little light for the NASDAQ. It did overrun it a few ticks, didn't it? That's why we're not doing 1 or 2 ticks. But sure enough, all that momentum took it to the top side. Guys, this is your pattern. And it's the same everywhere. Let's go back. So here we have a real world situation. Strong triggers. Well, I was going to say potential to break, but We hit the termination condition. So let's go find a tail. Strong triggers, potential to break, circle a tail. Right back to support inside of triggers. 70, 64 probably would have been a loss. It happens. Let's see if we can find a clear path with all that momentum. Man, market's going crazy, huh? Gotta be one somewhere. Oh, there's another potential to break. Remember when I told you most of your trades will be the potential to break? Most of your trades are the potential to break because decisions are made at key areas, and that's where the bounces love to happen. So odds favorable, potential to break. Somewhere between these trigger lines is my range for retracement. My potential entry area is right here. My entry is just below the mid band. I know where my stop goes, and with all that momentum of the potential to break, it went down. This is your pattern, guys. Potential to break. First pullback directly to support inside of triggers. Couple divergences on only the potential to break. Pushes it down lower. So the idea, the hope and the wish and the want is that you guys will train yourself to always look at the large chart first. So Junior and Jerry and RO and Better Dad and really all of you guys in this room, JK, start on the large chart. Don't worry about the small chart. Don't worry about entries. Don't worry about making money yet. Be able to identify these two concepts, strong triggers and a clear path. And until you can do it in your sleep, participate in this classroom and make sure that we get those lessons reinforced. So take 25 pictures each. So here's the question. You guys have heard me say this every day for 9 months. Who's taken 25 pictures of strong triggers and annotated them? Has anyone done that in the room? I'm not trying to put you on the spot. 19. So Jerry, you're pretty good at recognizing strong triggers, right? And you don't ever confuse them with weak triggers? Is that safe to say? It's only one part of it. Once you're good at this, now we get into clear path, right? So Jerry, you're in the second phase where you're working on those clear paths. If you go to these basic rules, a clear path is always the same, right? And I've given you about a 20 picture head start. When both the small and large triggers are below support, it's now broken. The path is clear until you reach the next area. The recipe never changes, ladies and gentlemen. So if you know that you're working on clear path, make sure you're studying clear path. Make sure you're studying termination conditions. Get those pictures taken. Because Jerry, the beautiful thing is you'll never forget about momentum. You'll never forget what momentum looks like it. The next area seems to be the hang up. Okay, so let me see if I can work around that a little bit. And let me find a pretty good example. I'm going to use this right here, Jerry. Let me make it nice and big. And let's make it so we can see the next area. Price reaches the area. The triggers haven't broken. Is everybody okay? This is a termination condition. This says no trades into that red line. I have no idea what's going to happen. Cool. That's usually pretty easy. Small triggers have busted through resistance, but the large triggers are still below. Do you see how this has the potential to break, but it's not broken yet because the large triggers aren't through? And look at this. Large not through, large not through, large not through, large not through. Boom. Now it's broken. So the path is clear and the momentum is strong. Rules 1 and 2 are met. So Jerry, until, assuming we get there, until I get to this red line, I'm just looking for an entry. Does that make sense? I waited for the reaction, I let it break, and now I'm just waiting for an entry. I can see the red line, but until I hit it, my path is clear. And if I don't get the pullback, that's fine. Well, there we go. So it never actually hit it, and the triggers weaken, and we hit support, and now all my triggers are above, and I'm starting over. And I was hoping to find one where we broke through. That was my bad. I picked the wrong one. Here we go. So let's do it again this way. First, it's a termination, right? Then it has the potential to break. There's that entry with the potential. Now it's broken. 100% path is clear. Let's look for the high probability trend trade entry. We had the medium probability entry. Now we're looking for the high probability. And look at this. So this bar, it's perfect. 2 bars later, it's a termination condition. Jerry, is that what's getting you? You're like, man, I finally have the clear path. Son of a bitch. There it is. And now it has the potential to break, and it didn't. So that's one of the reasons why in my PowerPoint every morning, and let me pull that picture up. In my PowerPoint every morning, I share this picture. That there's going to be times where it's stacked and you just can't get that clear path. And this is what gets new users. Jerry, this sucks, brother. I know it does. Because all you want to do is take that trade. All you want to do is get in. All you want to do is ride that wave of momentum. And those freaking fibs won't let you. This is the hardest thing for new users because new users have to remind themselves that another trade is coming. New users have to remind themselves that the market goes up and down all day long. New users have to remind themselves that eventually the clear path goes away. Eventually the bounce happens. But what's awesome is we can pinpoint where it's most likely to happen. Which means that when you learn a little bit of patience and you learn to identify those termination conditions, Jerry, you'll start finding your opportunities below this fib before you reach that fib and differently. So I encourage you guys, focus on the very, very basics and learn how to be okay with the idea that you'll wait and you will find more opportunities. And this is a great drill to get that chart reading in place. And then as you go through that, here's pictures of what it means to have a strong top or bottom, or strong triggers and weak triggers, or termination potential. You fly broken helicopters and ride motorcycles? Right on, Jerry. I spent the better part of my life on motorcycles. I totally get that. I used to race motorcycles, and I can tell you I ended up in the weeds a couple times because I wasn't patient waiting for the pass. And then defining. So JK and Jerry too, my pilots do well with this software typically because I give you a checklist, right? So think about when you were a young little junior pilot trying to earn your wings and you had to go through your checklist before they'd let you take off. And why was that? Because it kept you safe, right? Because it kept you from killing people, crashing into houses. It kept you from taking off with a loose rotor. So Jerry, this is your pre-flight. Making sure that these things are true. In the same way, when you were learning to be a pilot, you had to learn what it meant to be flaps down. And you had to learn what it meant to, that's the only term that I know. But you had to learn the verbiage and you had to learn what it meant and you had to learn how to do it. That's what we're doing right now. Yeah, we're laying down this foundation. So this trend trade checklist, guys, this is the best of the best. And nobody's ever used this list truthfully and done worse than 70%. So I'm going to give you guys this as well. And now here's your gospel truth checklist right now as a brand new user. This is the KISS plan, guys. This is the Keep It Simple Sunshine plan. And this plan is a stepping stone in your learning journey. It's not the only trade. Ron C. coined the phrase, and I love it. This is not your get-rich trade. This is the one that teaches you to see your get-rich trade. This one's designed to optimize your chances of success. And then through simulation, study, class feedback, and continuous practice, you'll create your plan, guys. You'll create your awareness. You'll recognize your patterns. You'll find your other entries. You'll find different ways to manage. But until you can do that, until you can read your indicators efficiently, until you get that feedback, until you practice, until you've studied and simulated, this is the best of the best way to do it. This is the easiest way I know how to teach it. And there's two things you need to know before you sit down to trade and you're not on simulator. You need to know why you'll enter. This is your checklist. And your answer is because the rules are met. Because rules describe a pattern that has been proven to win more than it loses. And guys, I don't want you to believe me. I know that sounds weird, right? RO, I don't want you to believe me. Better Dad, don't want you to believe me. Junior, I don't want you to believe me. I want you to come at this and I want you to say, you know what, that Novak fella's probably full of beans. I'm going to follow his checklist. I'm going to learn these rules and I'm going to prove that he's full of beans. And if you do that, you'll be with me forever. There's no doubt in my mind. So describe the pattern. And once you know the pattern, guys, there's no reason to second guess. There's no reason to not take the trade. And there's no reason to fear loss because you've proven it wins more than it loses, but it will still lose. And then why will I exit? This is the hard part for most people. Exits are either taken at profit targets, they can be predetermined, they can be at key areas, or when your advantages are gone. So everything goes back to advantages. If I get into a high probability trend trade and 3 divergences print, I have to exit that trade. My advantage is gone. If I enter the high probability trend trade and the market pushes beyond those triggers, 4 to 5 ticks, I have to exit that trade because the advantage is gone. Guys, you're going to learn how to be okay with not winning every trade because you're going to know that you're going to win more than you lose probably if you're trading the pattern and following the rules. So define your entry. Get in at the right spot because great entries create manageable trades. And then you have to do something with it. And guys, the KISS plan management is as mechanical as I know how to build it. It is as pragmatic as if then. If this happens, then I do that. Don't deviate as a brand new user. Let it play out. Learn how to follow this. Learn how to manage conservatively. The KISS plan is trading 2 contracts and it's designed, the management is designed to understand and trust stop placement, and it's designed to get you paid. Everybody has this idea that if they can't make $1,000 a trade, it's not worth it. If I can't make $500 in 3 minutes, this is crap. Guys, sound that out in your head. Work through that for me. If I can't make $500 in a 4-minute trade, this is bullshit. And people think that way. Guys, there's 10 trading hours. Find 5 or 6 trades. Make 200 or 300 in each. You'll never work another day in your life. So, this is designed for stop placement and getting you paid. And everything is dependent on you understanding your entry. So if your entry is 2 ticks below resistance, inside of triggers, the initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. If you pucker up and put it below resistance inside of triggers, it's likely to get hit. If you keep it in the retracement zone, it's likely to get hit. So we put it where the advantage is gone. And guys, you're going to know your risk before you ever enter a trade. You're going to be able to see those triggers, know exactly where 4 to 5 ticks are, and you can make the decision whether or not you're okay with that risk. Targets are predefined in the KISS plan, $100 and $200 away from your amazing entry. And if they don't stop you out, if the small crowd doesn't push up and hit your stop, you're going to get that reversal bar that prints on the direction of your trade. And you're going to redefine where the market should not go. You're going to embrace that language. The market should not go a couple ticks above that reversal bar because now the market is moving in the direction of momentum. It's moving in the direction of the clear path. It's moving from the area most likely to create a bounce. And your $150 initial risk per contract just went down to $30 per contract. That's where the precision comes in. It doesn't guarantee a win, guys, but a $30 loss does not sting. Not even a little bit. And if price reaches your first contract, instead of stopping you out for that small loss, guys, one of your contracts is automatically pulled off. That money goes into your account, your sweaty palms dry up, and you're going to move your stop to break even. You're going to take 100% of the risk off of this trade. Is it the best stop, Mark? Hell no. You're going to create a plan when you get a little experience, but right now we're going to focus on getting paid and keeping it. I have absolutely nothing to lose. My large chart is screaming south with nothing in the way. I'm going to see if they can get to $200 profit. And if they do, ladies and gentlemen, 4 minutes of your life just produced a $300 trade. And again, that doesn't feel like a lot, right? $300 a day, if that's the best you pull off every day for a trading year, that's a $75,000 year. And it's amazing to me that the attitude of so many traders is, well, I have to make more. I have to make more. And they're content making nothing at the end of the year instead of making consistent profits every day. And then you will learn how to compound those profits. You will learn how to add contracts. You will learn how to use trade copiers to get more out of that one beautiful trade. So learn how to get in, learn how to get paid, learn how to do what it is that you need to do to be consistent. And that's what we just talked about. And I just put a file in the room called Everything You Need. And inside of that zip file, guys, download it. There's the chart reading 101 to make sure you understand the basic concepts. There is the PowerPoint that I used to teach every day, so you can go back and review it, ask me any questions. There's the high probability trend trade checklists. There's the KISS plan. There is one that says pictures you can take, and I think this is important. Take a lot of pictures. Take a picture when you activate your limit order. Go back and study it later. Make sure you followed your rules. Take a picture during the trade. Every time you take profits or move a stop, take a picture. You're working on your management plan. After the trade, take a picture. Write your rules 100%. This is what I saw. This is what I did. This is why I did it. This is where I did it. And then when you don't take a trade, Jerry, this is what I was talking about. When you don't take a trade, pop it in the room. Hey, Mark, this is why I didn't take the trade. Sometimes we high five. Way to follow your rules. It kept you out of trouble. Sometimes I let you cry on my shoulder and I say, I know your rules weren't met and it went anyway. That's okay. There will be more. But sometimes you show me no trade and I show you why the rules were met. And guys, those are money, because what it does is it changes your mindset and helps you catch more. And then finally, this one's in there. This is the Trend Trade Simple. This is everything that we've discussed for the last hour, consolidated into 2 pages. Commit these 2 pages to memory. Strong triggers, termination conditions, defining a termination conditions, what it looks like when they break, why you need patience, the entry advantage, the refinement process, the process of getting in, how to study. Everything you need to be successful with the software has been laid in your lap, guys. The only thing that you don't have is the experience for these looks to be easy. My brother used to say in the classroom that I spent time in as a brand new user, it's obvious. Well, you know what? Why am I looking for the entry here? And he would say, well, it's obvious because you have this, because you have that, because it did this. Guys, respectfully, that's crap. Nothing is obvious in the beginning. You have to make it obvious. And the way you make it obvious is posting in the room and using your spreadsheet. And it will become obvious. And there's 30 people in here. There are 25 people in the room that will tell you that's exactly how it becomes obvious. Ask for feedback. Track your trades and spend a little time studying. Amen. So guys, when I come back, we're going to do the second half of the day. The second half of the day is dedicated to you. The second half of the day is looking at your charts. The second half of the day is your chart reads. It's your questions. It's everything that you need to feel comfortable to be able to start moving forward And the only way that I will not help you is if you don't ask for help. That's the only way. The only things that I cannot fix are things that aren't broken. And if something is broken, I don't know it until it's presented. So go stretch your legs for 5 minutes. Go get a drink of water. I'm going to do the same. I'll be back in 5. When I come back, the rest of the class is dedicated to reading your charts and answering your questions. I'll see you guys in 5. nothing worse than NinjaTrader deciding to crash when you go away on break and you guys have to stare at a blank screen. Sorry about that. I'm going to bring it back up right now. All right, we're going to get into the second hour, or the second half of class, I suppose. And remember, we're going to go back and we're going to talk about momentum, we're going to talk about path, and we're going to talk about entry. No matter what kind of trade you guys are showing me, that's exactly what we're going to talk about. And I want to remind you guys, getting into this, everything is about a foundation, especially for you folks that are feeling like you're missing out, that you don't have it, that you're not good at it, that oh man, I bought the software and this is crap, I can't seem to produce. Guys, everything is about a foundation. Everything is about understanding the basics, and then you're going to compound a little bit each and every day. There's this Japanese philosophy, Kaizen, and it says, stop focusing on the end goal. Start focusing on becoming 1% better every day. And that's really how I like to teach this room. And for you new users, I blanket you with very conservative rules. We talk about the recognition of advantages. There's a solid plan that optimizes your chances of success as you learn to read the indicators. So for you new users, it is going to feel like all termination conditions are bad, and no momentum is bad, and no areas inside of triggers is bad, guys, but they're not always bad. These are blanket rules because it increases the likelihood of success for you as a brand new user. And when you get a little experience, you're going to see more. You'll know when to use those exceptions. And I like to say this as we go into the second hour because you're going to see people using those exceptions. If you learn the process that yields the results, if you focus on the patterns that have been proven, the results tend to follow. If you focus on execution rather than results, the results tend to follow. This is where the KISS plan comes in. If you keep it that basic, if you follow simple rules, and here's that key phrase, and the whole reason that I wrote this, if you're okay not looking for all the trades, but rather only looking for the best trades, you can find an extraordinary level of success. Guys, I've watched it repeatedly over the years. And the further you deviate from simple, the more you try to find everything instead of the best. Guys, that's when it tends to take a little longer to get to where you want to be. Simplicity. So question everything. I do encourage it. I want you guys to ask a million questions. But give yourself a little grace, guys. You're brand new. It's okay to be brand new. There's no shame in being brand new. And I'm going to tell you right now that the greatest lessons that you ever get are probably going to come from the mistakes that you make as opposed to the victories that you have. So embrace those mistakes, and they'll probably lead to victory. So we're going to go up to the top, and I'm going to start looking at some pictures. I've got 3 different people's worth here. I'm just going to get them all going. Figure out where the heck I started. All right, so Andy Man gets us going here. And Andy says, check it out, Mark. On my large chart, I have odds favorable momentum, and there's nothing in the way. So what I'm going to do is I'm going to take a momentum-based trade, and I'm going to take that momentum all the way up to the area where the market could stop. And then, Andy, respectfully, I'm going to say to hell with that area that could stop the market. I'm going to give half of it back, at least on one contract. And guys, this is okay. You'll notice that he traded 6 contracts into that area. And of those 6 contracts, he took 5 off where the market could stop. All that money's in his account. He says, I'll give it a shot with 1. We'll see if we get a runner out of this one. And then when it comes back down, he's willing to give some of that back because he took most of it off where the market could stop. Andy, great trade. And then let's see who's next. We'll minimize a little bit here. This was, is that Pete, I believe? I forgot whose pictures. Oh no, Andy, this was you. And Andy, it's a different look, which threw me off. And that's because this is gold. So large has a strong top, means it's a termination, reverse the market, has odds favorable momentum. And Andy, you got in up here on that little snapback. I love it. No divergence. This one was potential to break. and you get in on the way down because it didn't hit your mid band, but you let momentum and path do its thing, and it was a pretty easy win for you. And then you take your exit because you didn't have any areas inside of favorable large triggers, which means that even though rules 1 and 2 look good over here, rule number 3 wasn't met. And Andy remembers that lesson. Once you get to the wrong side of those triggers, there's no telling if or when the market will stop. So rather than hold and hope, he took his money. He'll wait for the next trade. Andy, absolutely outstanding trading. Joel doing a little playback, increasing repetitions, getting that recognition. Joel says, check it out. This is a weak top. This isn't a termination that reversed the market. This was just weak triggers and it went the other direction. I've got odds favorable momentum, strong triggers, but it's not a clear path because these areas aren't yet broken. And Joel says, check it out. Area inside of favorable large triggers. The entry is perfect. The momentum is perfect. The path is not. And Joel says, oh man, I lost this one and I was beating myself up about it. But then I remembered, and guys, this is such an important lesson. Joel remembered this wasn't a high probability trend trade because the path wasn't clear. And when you have a medium probability of 50-50 trade, a strong top or bottom increases the likelihood of success. No divergence increases the likelihood of success. So Joel sacrificed 50% of his advantages and got the result that you would expect. And Joel said, I'm not going to beat myself up about this. I'm going to take that lesson and I'm going to do better next time. Joel, way to police yourself. Great job on that. And then this was Pete, and Pete says, first warm-up trade of the day in Sim, not the best looking large chart. Weak bottom, technically not a good top, as price didn't reach a fib. Not a clear path, as the large trigger hadn't cleared the fib, but I did have momentum. So Pete took a 50-50 trade. Smalls are through, larger not quite there. And he says, you know what? For 6 ticks, I'll take it. But because it's medium probability, I'm gonna run it tight. And he did. And 6 in at 57, 6 out at 63. That's a 6 tick. It's still a $600 or it's still a what? $360 trade. Super low risk, super quick profits. Guys, you'll learn how to take chances. 480, thank you. You know I'm no good at math. Guys, you'll learn how to weigh out advantages and decide whether or not you're willing to take the risk. And Pete chose to take the risk on that one. First trade in the live account, mixed large chart. Not a strong top. Large triggers are still up. Small are not below. No clear path. And Pete says, F it, I'm going short. And it worked out. That's cool. That's Pete's plan. I'm obligated as the teacher of this class to go through the lineup. You didn't have momentum. You didn't have a clear path. But let's celebrate a little bit. So Pete, can we talk about your enter just underneath the fib? And this is going to be a lesson for everyone, but Pete, I think this is going to pay dividends. And I'm not going to lie. That look, not a great look. All the triggers above, large are still up, didn't hit the fib, right? But I want you to see something. Price got below, price got below, price got below, price got below. So you get a tick or two below, 70% of your price bar is still laying on that area that could stop the market the same way it did 6 times before, Pete. In this look, if you're hell-bent on going short, at least let the price bars get away from the area. At least pull price away from that decision-making point. It's going to give you more of a fighting chance. Because if you took the same one here, 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 or here, it was instant slaughter. It's just a little more advantage when you're hoping it's going to go. because now at least you let the price bars get away from the bouncy point. Large chart volume says sit on hands. But you didn't. And that's exactly why, though. It snaps right back up, right? Terminations for the win. I don't understand the volume thing, but I know you do. Good stuff, Pete. Thank you for sharing those. So new users, what you're seeing is people finding a way through their chart reading, through their experience, through their time with the software to calculate, to gauge the risks and make the decision for themselves whether or not they want to take that trade. Jen says, with no triggers through, there's nothing for me to do here. And I love these pictures. Jen said, I'd rather take a picture of my large chart not being right than to take a trade and hope that it does what the indicators say that it probably won't do. And guys, those are great pictures. Jen, thank you for that one. Bob, be the man. Weak top? I agree. Odds favorable? I agree. Directly into a termination condition? I agree. So you've got strong triggers and not a clear path. You take the first pullback and it doesn't work. You stay on it. I love this. 500 profit. Quit for the day if I was live. I love this. So, Bob, and I just want to go through this. And guys, remember, I don't tell you how to trade. I don't tell you what to do. I don't tell you when to do it. I teach you how to read indicators. I have momentum. It's not coming from a strong top, which means 9 out of 10 times, it's more likely to continue back up from this area. I am 100% into a termination condition. And not only is it a termination condition, it's a termination condition on the small chart, that same line, with divergence, with absolutely no triggers through. And you take the first entry. Cool, you're taking a shot. And then it says, you know what? Bob, we're not working and we're heading up. And you said, that's okay. I'll keep all the risk on this trade. Not scared. I'll keep, let's see, you were in at 61. Your stop had to be over $250 per contract where the market shouldn't go. So $500 risk trading directly into a termination from a weak top. Does that sound like the recipe for long-term success? Not to me. This is what we call a short-term victory. And then your brain starts saying stuff, Bob. And thank you so much for being a good sport as I do this. I know this isn't always easy to hear. Your brain says, man, I'm an effing big deal. I'd be done for the day. I'd be golfing right now if this were only live. But if this were live, Bob, that's what's more likely to happen. Even with the momentum, that's what's more likely to happen. This is one of the reasons I tell you guys, these little short-term victories, getting lucky, breaking rules, it does what you hope it does instead of what the indicators say it's going to do, they feel awesome. They feel awesome. You want to grab your buddies and you want to pull out the tape measure because you're sure you're the biggest deal in that group. These are the ones that fail more often than they win. These are the ones that when you convince yourself in simulator that this is your right trade, these are the ones that blow out your counts almost instantly when you go live. So, Bob, thank you for sharing that. Thank you for the lesson. But when you have strong top and odds favorable and a clear path, where are we at? Up here? Nope. Potential to break. Weirdo. And then it pulls back to support inside of triggers. And you take the best entry. You're still in a little bit high, but that's good. Stop makes sense. Boom. Bob, do you need the maybe trades? Do you need the I hope trades when these set up? Because golly, that's pretty. That's one of the things that I try to do in this room, is I try to remind you guys that the right ones are coming. And look at that, Bob. Odds favorable, directly into support, and it bounces like a mofo. This is a great looking trade. I love everything about this trade. But look at that momentum going into support, and it didn't work, right? That's what you have to remind yourself, that I don't have to be in the market every trade. I don't have to be in the market every move. The best moves are coming. And I want to, there's a user in the room, and she said, she goes, you know what? I'm taking half the trades that I used to take because I'm being patient. I'm taking less, I'm risking less, and I'm making more. And I think that that's a pretty outstanding thing. Directly into a termination condition, directly off the termination condition, and Bob says, hell yeah, let's take it twice with that termination. Because when I go back historically, it went up. Bob. First one was directly into a termination. Second was 50-50 with weak triggers and 2 divergences. And then it hits the termination, and then you get the divergences. You're letting the siren song of the small chart talk you into bad decisions. Or maybe you think they're good decisions. But you're letting that small chart convince you that the large chart doesn't matter. But as long as you call them 2 entry areas, you're telling me, Mark, I believe this was an entry for a trade I would take. Because if this doesn't say look for an entry, that's just fluctuations on a small chart that have no relevance in my life. Trading into that fib is going to work less than it doesn't, right? They overran a little bit, but look at that. Decisions are made at key areas. You don't have to trade into them. Let them break. They'll break if they're going to break. I think one of the worst things you can do when you study, and I'm not saying that you did this, Bob, one of the worst things that you can do when you study is say, I know my rules weren't met, but I would have gone short here and ridden that down, and this would have been a great winner, right? Because historically, you can see it. You can say, hey, look, I would have gotten in right at that fib and ridden it right up to the fib, because hindsight's 20/20. And guys, that's dangerous sometimes. So if you're going back and studying historically, make sure that you're looking to follow the rules, not saying what you would have done based on what happened. They're typically very different. Ron says, check it out, Mark. Odds favorable, not a clear path, but it has the potential to break. Yeah, exactly. Bob, I only know it because I've done it. Pulls back, doesn't get to the retracement zone. Right? So, Ron, the only thing I would say is you realize that it could have gone all the way up to these triggers, all the way up to these 1-to-1s. I don't know where your stop was, but I'm glad it worked out. More often than not, with this look, it's likely to go up here. And you're too far away for this to be considered the momentum trade. But it's a good read. When the large chart is down and says down fast, it's likely to go down. Ron knew which area he was going to let hold if it was going to hold, and did a good job. All right, Jerry, 1967. And guys, I appreciate your patience. I know that when you post a picture, we all want to see it right then, right? And man, I wish he would just go to my picture. I wish he would talk about it. I'm chomping at the bit. I promise you we'll get to it. So high probability trend trade assessment. That was a termination, and then it broke, and then it was a termination, and then it had the potential to break, and then that was a termination condition. Does that make sense? You nailed momentum, Jerry. Do you see how price reached the divergence high? None of the triggers broke. That was your final termination. That's the one that reversed the market. But look, we're into a termination condition right here. And there's a cool thing. Look at that. 1, 2, 3 divergences. Right at that 50 range. Said, don't do it, Jerry. Don't go short. Small chart termination, large chart terminations, man, all coming together. So what's your assessment? Was this a trade or a no trade? What do you think? No trade. Beautiful. I love everything about your assessment. You read it perfect. And then your patience was awesome. Nicely done. It's a bummer though, isn't it? It's a bummer to have no trade sometimes. Your brain never says, way to not throw money away. Your brain always says, man, you didn't make it. Strong triggers, no. Strong top, triggers rolled, smalls above large. Entered anyway. Entered anyway. So there you go. I have a termination. I don't have a clear path. I'll trade directly into the fib. Man, I still disagree that that's, I mean, yeah, it's a tick below the fib, and it worked out. And guys, is this my trade? No. You couldn't pay me to take this trade. But it's Pete's trade. And Pete let everything come from the strong top, and that's probably why he was willing to take this trade. What did he have going for it? He had a strong top. What did he have going for it? He had strong triggers on the small chart. What did he have going against it? No momentum, no clear path on the large chart. So what's he doing? He's saying, I know terminations on a large chart that reverse the market are impactful. I'll take a shot. And I'll hold on to it until the small chart momentum is gone. And 90% of you in this room, that's probably not your trade. But Pete likes it. Pete studied it. Pete's gone through it. Pete believes he can win that one more than he loses. And that's why Pete took it. So, good job, Pete. Like strong tops and bottoms. Love the idea of a market that turned. I agree. I agree, Pete. It sets you up. Termination, odds favorable, clear path. You get in on the close below, and it rockets up. So here's my question. Morgan, you've got a big blue fib right here at 61. That big blue fib should be over here as well. I'm not sure why, but your synthetic didn't pull over, which means it's a termination condition, which means the likelihood of it winning is pretty low, and it didn't. So I don't know why it's not printing, but if you see a fib here, believe that it's here. Because on that large chart, and this isn't just for Morgan, this is for everybody. On your large chart, guys, there are 3 time frames that should always show up on your large chart. You should have the native fibs, and you'll see those. They'll extend all the way over to the right. You'll have the small chart fibs that are skinny and don't extend, and you'll have an even higher time frame that doesn't extend. And Nexgen's put these 3 levels on that large chart, and they're the result of, gosh, tens of thousands of calculations, because this gives you the highest chance of success. Every one of these areas could stop the market. So here the native stopped it, here the 21 stopped it, here the small chart stopped it, here divergence stopped it. I mean, so Morgan, that was probably the challenge that goes there, and I'm not sure why it didn't print over on your large chart, because it looks like you have synthetics up here. I'm going to ask John about that today, so hopefully I'll get an answer for you. Other than the termination condition, everything looked perfect, right? But trading in termination conditions works less than it wins. So that's kind of a good lesson for you guys that are getting lucky trading in termination conditions, deciding, well, I'm going to do this all the time because I won this one. It's the 10 times that it fails that gets you. Ron says this is not a trend trade. Rules are way different. Once high probability trend trade becomes second nature, these trades are easy to see. Price clears trouble with odds favorable momentum. So what is he saying? And I like to share this. Guys, this isn't a Nexgen trade. Ron invented this trade. So when price reaches an area, decisions are likely to happen at that area. And Pete, this goes into what you're doing as well. Does everybody remember that lesson? When price reaches an area, decisions are likely to be made by the large crowd. Ron's trade says, I'll let all of price get away from that decision-making area. I will force them to carry all of the prices to the other side. Better Dad, this is probably what got you on the idea, because his idea of clear isn't the same idea as the high probability trend trade. There's a big difference. And he says with odds favorable away from the decision making, because I know momentum doesn't always last, I'm going to look for $110. I'm going to look for $115. And once I hit that, I'm going to get the hell out because momentum happens and then momentum doesn't happen. So I'd rather get paid, get a base hit, and I'll just let these base hits stack up into a wonderful day. Ron, great picture, great trade, great lessons in there. Pete, everything says up, you go short. I'm glad it worked. Termination, determination, 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 determination. And Pete said, I'm done waiting. I'm going to keep trying to snipe tiny little movements inside of this range. And you're doing it well. But the likelihood of success when every indicator on every chart says up of that market going down diminishes greatly. So I'm glad you're winning. All right, Joel, you're using a high probability trend trade checklist on a medium probability trend trade chart because the one-to-ones are not broken. And guys, I want you to give me a why if you see this. You've got the best momentum you could ever hope for, but the smalls are below and the large are above. It's only the potential to break. And why do we define that? Because when it's only the potential, I'm going to have to manage it a little differently. That's the only reason I'm pointing this out, guys. It's not a clear path. I might have to manage a little differently. Joel, you take a beautiful entry, and you didn't enter at the area. You entered on the way down, which I like even more with divergence on a 50-50. You get out before trouble and out at the fib. Nicely done. This is the exact same look, Joel. We're going to talk about consistency for a second. Because I fall victim to this one. Weak top, strong triggers, potential to break, divergence prints, took a loser. Weak top, strong triggers, potential to break, divergence prints, took a winner. Which one is right, guys? Which one was the right trade? Which one was the wrong trade? You can't answer that. What's your plan say? What's your plan say? It doesn't roll until the third Thursday of the month, Rob. We still have a little bit of time. Both are the exact same trade, right, Jerry? One was a winner, one was a loser. So that's where you have to say to yourself, what does my plan say? That's it. And guys, remember, so on the KISS plan, this is where gray comes in. The KISS plan on the 50-50 trade says that you have to have a strong top and no divergence. Why does it say that? In order to optimize your chances of success, to have the highest probability of a win, You have to have a strong top and no divergence. When you learn to read your indicators through simulation, through study, through class feedback, through continuous practice, you'll make your own plan. Does that make sense, everybody? So you can't beat yourself up for breaking the rules and then celebrate the victory for breaking the rules. It has to be one or the other. That's what I'm getting at. Consistency. So this is either no trade or it is a trade. I love the trade. I love this look on the large chart. I would take that trade all day long. That's me. I've been doing this for a while. If you're holding yourself accountable to the actual rules, just because it's a winner doesn't mean it was the right trade for you. Change your rules. Change your plan. Prove that you found a pattern that wins more than loses. And not beating up Joel for this one, right? But this is normal. This is a normal part of the learning curve. Is you will justify rules breaking because of a winner. One of my favorite phrases in the room, yeah, but I made $500. Guys, until you're sending me 300 of it, I don't care that you made money. I want you to stick around forever. I want you to be able to do this as a career for the rest of your life. I want you to change your life with the potential that the software affords you. And consistency is key. Price clears the back. Odds favorable, momentum galore. Get in, get out. Base hits are worth it. Amen. Guys, that's the exact same trade as that trade. This is Ron on the S&P at 9:50 a.m. This is Ron on crude oil at 10:05 a.m. It's the exact same rules. It's the exact same entry. It's the exact same exit. Well, Jerry, I've never taught a gap trade in my life, so I couldn't even begin to do it. Jerry, list ice cream in order of best to least. It's subjective, right? So, Jerry, you may never click with this trade, right? Does it mean that it's a bad trade? Of course not. So the only thing that you can do, Jerry, and I can't do this for you, because honestly, I don't want to go find every trade known to man, take 100 pictures and figure out the probabilities on it. I got things to do. What I do know is that Nexgen has already done the work on this one. This is the one that wins 70 to 80% of the time. So Jerry, what you can do is you can learn how to follow the rules for a trade. I can tell you that the work that's been done on this one is almost the same win percentage, but only if you follow the rules. So I don't think there is a best. I don't think there's a worst. I think there's a right for you. And Jerry, I've had people that can't see short trades to save their life. And it's the weirdest thing ever. They refuse to take short trades because that direction doesn't click. And I've had the same thing with people on long trades. And I've had people that refuse to take 50-50 trades. They'll only take a clear path. And I've had people that won't even take trend trades. The only thing they'll take are counter trend trades from key areas with a couple of rules met. So avoid the temptation of labeling best to worst. Take 20 pictures, get a percentage. If it's easy to see, that's your trade. But until you can read your indicators, you'll struggle with that. Does that make sense? And Morgan, peanut butter chocolate would kill my kid. So I would have to say that's probably the least. But it's good for you. All right. They don't all work. That was the perfect 50-50 trade from Pete, guys. That is strong triggers, potential to break from a strong bottom. Everything was perfect, and it just didn't go. It just didn't go. Pete, perfect trade. It's the peanut butter. It's the peanuts, Morgan. Do you guys see it? So when we talk about medium probability, Jerry, you have to change your idea. Because even the perfect medium probability trade is still going to fail every now and then. So it's consistency. I like it. I think it's funny how different trades work differently for people, how they see different trades. Pete, everything's screaming down, hit support, Another 8,000 sell-side contracts in 3 minutes drove the market down another 50 ticks. There you go. But look at the untradeable bounce right off support. Pretty cool, right? You guys knew about that. Guys, that was a 20-point move. Or no, 20-tick move on math. 65, 80, 10, 20, 30, I don't know. That's a big honking move, and it happened instantly. And it stopped right at Fibonacci support. And that's pretty rad. Because you guys knew about it. Strong triggers, nothing in the way. Clear path, base hit. There we go again, guys. Ron, you're 3 for 3. Exact same rules for entry, exact same rules for exit. You guys know that's the difference, usually between successful traders and people that struggle, is the ability to do the same thing over and over, to not deviate from the plan that works. Odds favorable. There was a strong top up there somewhere. Clear path. Right back to resistance inside of triggers. Easy win down to the bottom. Joel, perfect trade. Perfect setup. Every advantage. Easy money. Beautiful. Which one? Better, Dad? Ron's trade? This one? Can I flap my gums a little longer than I need to on this answer? So let's talk about the rules. Did it have momentum? Yep. Did it have a clear path? Not quite. Did it have a pullback to areas inside of triggers? Nope. Can't be a trend trade, right? And this is where you guys will get. So what's the basis for this trade? Strong triggers? Strong triggers, right? What kind of trade would you call this, Better Dad? If the basis is momentum, it's just momentum, right? But it's not even a Nexgen momentum trade. Ron jumps the fudge in. No, it's not even medium probability trend trade. It's not a trend trade. It is not a trend trade. The large triggers are down. All of the indicators are, all of the triggers are below this fib. The only thing going for this trade, this is the chili dog. This is momentum and momentum with nothing to create a bounce. It's get in, get out. I love this trade. Guys, this isn't a next-gen trade. This is Ron's ability to read indicators. This is called the chili dog. I've been teaching it a lot more because a lot of you guys are trying to do it, but the whole basis is momentum, momentum, momentum. Nothing in the way. Momentum and path. That same broken record. No, it's okay. So Better Dad, it's not the first trade. These are the trades that you see when the easy trades become easy. When you see the high probability trend trade and you see it clearly, that's when the next trades become easy. So everything starts with the termination. Guys, I'm teaching this trade up here. I'm teaching this trade in between fibs with odds favorable momentum. Does that make sense to everybody in the room? The first hour, the basics in this classroom, this is it. It's highlighted because that's the best of the best. Guys, once the termination holds, if you're using a market flow chart, there's John Novak's breakout bar trade. There's HVA trades that Nexgen's been teaching forever. There's momentum trades that require the potential to break out, momentum on both charts. And then there's that chili dog trade that's nothing but momentum and nothing in the way. That's not even a Nexgen trade. But there's 5 different possibilities. Could you guys imagine baking a cake? I want you to do this. And I want you to use your imagination with me for a second. Let me open up this. Where is it at? I'm a brand new baker. Okay? I just started in the kitchen. I'm good. And I've been looking at 5 recipes. And then in these recipes, one cake needs 3 cups of flour. One cake needs 3.5 cups of flour. A different kind of cake needs 6 cups of flour. And then the final cake needs 1 cup of flour. I've seen all these cakes, right? I went through the recipe book and I looked at them. But now I'm going to bake the cake from memory, which is what you guys are doing right now. You're baking the cake from memory because you're not looking at a checklist very often. You're trying to remember that glance that you had at rules and hoping shit works out. And maybe this one with 3 cups needs 3 eggs, and this one needs 2 eggs, and this one needs 1 egg, and this one needs 5 eggs to make up for the loss. So when you go to bake that cake from memory, guys, you're using 3 cups of sugar, but you're using 5 eggs, or you're using 6 cups of sugar, but you're using 3 eggs. And what happens is when you try to find everything, when you are focused on everything that's possible with this software, you're likely to confuse a little bit. But if you focus on the best and you learn how to capture this trade, and you just say to yourself, I have to be a little patient, everything else will come to me. Once this one is easy, guys, that is the path of least resistance to the highest level of success. Novak men suck at analogies, but that's kind of my analogy. So once Ron understood momentum, he knew that it's hard to stop it. And once Ron knew that with all that momentum and room to the next area, he could find a way to snag just a little bit of it. And it's not a high probability trade or a medium probability trade. It's not an HVA trade, and it's not a trend trade. It's Ron's pattern that he was nice enough to share with you guys. So keep it focused. You'll get there. But better, Dad, ask a million questions. And sometimes I'll give you the longer answers. And I know that that's a burden sometimes. Did I already look at that one? Nope, here we go. Odds favorable, clear path, no divergence. There's your mid-band, but because the mid-band is floating in the middle of this giant retracement zone, do you guys see how Morgan said, you know what, I'm going to force the market to go up. I'm going to force the market to begin to go in the direction of momentum and path? Because that's a huge retracement zone, and that's a lot of risk. This isn't perfect, so I'm going to force confirmation. And once he did, he had the wrong ATM strategy, and that's okay. But it's a beautiful trade, Morgan. It's an awesome trade. And because the entry isn't perfect, he forces confirmation. I love that. Great job, Morgan. Good looking trade. And way to know your rules well enough to know when it's not perfect and force a little confirmation. Define your risk. Large triggers are up. Small triggers are down. Coming from a strong bottom. Not a good looking large chart. Market reversed out of nowhere. Smalls rolled only. Entered because overall market bias has been down. There you go. Jump in, get paid. Pete, I'll never say that it's right or wrong, but I'll say this is the most aggressive I have seen you trade in a long time. This is the most fighting I've ever seen you do in one day. Take out of it whatever you get. Not a strong bottom, odds favorable momentum, pull back to the area in the retracement zone, ride that wave all the way up. Who was this? This is Jen, right? Jen, is that you? It's a perfect chart read. Jen, was it a clear path or not? You forgot to answer that one. My chart reading's a little off. Better Dad, Jerry, help me out. RO, was that a clear path? Everything's above this fib and we haven't reached trouble. What do you guys think? Jen, I want to see. No, I'm just messing with you, but absolutely. Jerry, do you see it? Because I know this is what we're working on together right now. Everything is above this fib and it hasn't reached that fib. That's the money-making zone. Jen takes the pull back to the area inside, knows where her stop has to go, reduces risk behind the reversal bar, and rides it right up to an area that could create a bounce. Absolutely beautiful. Exactly. So because the large triggers are not a full bar away, Better Dad. Great observation. Because those large triggers aren't way the heck down here, we're not worried about that mid-band right now. We're just following rules. Jen, beautiful trade. Beautiful trade. I get so proud of you guys. And then Morgan says, here's that chili dog. So let's do, what is it? Odds favorable momentum. Wow. Price clears trouble. Yes. Nothing in the way. Easy money in a matter of seconds, right, Morgan? Beautiful. What a great trade. So Better Dad, there's that mid-band. You notice how it's odds favorable and clear path? Those same lessons from the high probability trend trade. And what this is doing is this is saying, man, I sure hope that pullback doesn't happen. I sure hope the sellers can't slow this momentum down. This is the trade, Better Dad, that I taught to my wife. This is the trade that I taught to one of my best friends. This is the trade that I'm going to teach to my kid. There's less moving parts, but it's not Nexgen's trade. So I teach you how to recognize this one through the high probability trend trade. Morgan, absolutely beautiful execution. And then Boaz, dollars to donuts. Boaz's chart has momentum, path, and an entry at an area inside of triggers. Momentum, path, entry at an area inside of triggers. Ladies and gentlemen, there are people that consistency comes naturally to. And then there's me. Consistency does not come naturally to me. I fight every day to do the same damn thing because I am so full of opinions. Boaz, you kill it. Strong top, odds favorable, clear path, pull back to the area inside of triggers, and it's just easy money. It's just easy money. Great picture, great trade, awesome execution. Boaz is one of my consistent. This guy's like a robot. I love it. Steve Diego is just about in that same boat. So we have NASDAQ and ES. NASDAQ has momentum with the potential to break. ES has momentum with the potential to break. NASDAQ is taking a momentum trade. So Better Dad, this is the momentum trade that we teach via Nexgen. When your large chart has odds favorable momentum and the potential to break, sometimes there's really quick snapbacks right to the fib. That's the momentum style trade. This is kind of a little love child between momentum and trend because it did pull back to support inside of triggers. And it reversed a little bit more than I'd like to see in a momentum trade. But because of the understanding, small triggers break, sell the fib, Steve makes the easiest, fastest Look at that. That's 09 and he's out at 18. That's probably about a 3-second trade. Nexgen momentum trade. Beautiful execution. And then odds favorable, potential to break. Your trend trade happened somewhere up here. And Steve said, man, that's not a great look. Let me let it get back below the trouble stuff, and then I'll just make some quick profits. And Steve, 2 for 2, man. Great trades there. And then odds favorable. Everything is up. Getting in past trouble, getting out with profits. $195 in 1 second. Odds favorable and clear path. He waits for the bouncy thing to clear. And it's just easy money. Skosh Shirley. Is that how you spell Skosh? I've always wondered. There's probably a million ways to do it. Steve Diego, great trading. Momentum, 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 momentum. At first, it's momentum path entry. And then you guys start whittling that down a little bit because you believe in the advantages, because you recognize the advantages, because you know in your heart of hearts that momentum is hard to stop. Great job, Steve. All right, Better Dad. Odds favorable, way up here. So what do we have here? Here I have weak triggers and a clear path. You missed that you lost the odds favorable because you got excited about the clear path. That's normal. I like that you came back and pointed it out though. Okay, so Better Dad, let's get a lesson on entries. You ready? And I'll give you this. Let me take a picture. Trade failed due to weak triggers, no odds favorable. Clear path was a yes, but should have walked away. Learning to continue, evaluate both odds favorable and clear path. All right, so check this out. Better Dad. This is where language pays dividends, guys. Entries come from areas inside of triggers. And the one thing that I say every morning, my areas, Better Dad, are fibs, mid bands, yellow 1-to-1s. This is not an area. This is a loss of momentum. Does that make sense? Divergence is a loss of momentum. That's why it never made this list. That's not an area. That's just where the market slowed down. But you've got to take these trades. You got to take these pictures. So if we go through the whole idea of your trade is I didn't have momentum. I did have a clear path. And then the tiebreaker, I didn't have an area inside of triggers. And it becomes a no trade scenario. Does that make sense? This is why I love talking advantages, but it takes a while to put them all together. I didn't have momentum, and I didn't have an area. 60% of my warm fuzzies are gone. And that's one of those things, Better Dad, where if you never make this mistake, as on simulator, if you don't make this mistake when you're learning, you might accidentally make it when you're live. So I love that you took this trade. And I love where you took your entry because the thought process is right. We just had to redefine what the areas could be. And man, if I was going to take a shot at a short, big, strong, trending market, clear path, if I had the area all day long, man, all day long, you're killing it. I hope you guys celebrate your victories. I hope you guys take a second out of the day and say, man, I'm seeing progress. I'm starting to get this. This is starting to make sense. I know I was confused earlier, but things are clicking a little bit. Guys, always celebrate your victories. Strong top, none of the triggers get through. Potential to break. No divergence. Put my order down for a trend trade around the fib, but as soon as you place your order, NinjaTrader crashed. You have no idea your stop was where it was supposed to be. You can't manage when it crashes. Unless, Morgan, are you on Apex? Cool. So when you're on Apex, Rhythmic or Tradevate? Tradevate, I'm hoping. Either one, though. So you know, do you keep Tradevate open? Do you have... Okay, so if your NinjaTrader crashes, flatten all instantly. That's it. So let's talk about why would you get in at the fib? Momentum trade? Right on. So you were looking for the momentum trade. It didn't work out. Right on. It happens. I think that's a good look for a momentum trade. And I think, dude, that's it. That's the same one that worked for Steve, right? That's the same one that works more than it doesn't. And if it fails, it turns into the 50-50. These guys just had other ideas. I like everything about it. It's frustrating when NinjaTrader crashes. I know that it is. Won't be long. All right. So Junior. Why? Why won't you tell me why? Why won't you tell me why you entered the trade? Why won't you write on that chart? Why are you fighting me? And more importantly, where's your entry chart? Okay, you see? There we go. Let's fix that. What are you taking the pictures with? Capture software? Cool. All right, guys. That's my fault, Junior. I didn't ask you if you knew how to write on a chart. That's totally my bad, and I apologize for that. So let's do it together. When I click this big capture button, and let me do this first. Junior, what chart are you entering on? It's all right. Ron, that's some BS crap put together by snowflakes with feelings issues. So you're entering on the large chart. Did you know that you could enter on a small chart and reduce risk? Did you know that you could use a small chart and refine it and pinpoint right where that tail is most likely to form and have like so little risk on there? Great job, Hamid. I love it when you guys only pop in to tell me that you hit your goals. So Junior, I'm going to throw something out there. Do with it what you want. I can't force you guys to do anything. But I can tell you, from 5 years of teaching people to do this stuff, this is the easiest way. Let the large chart lead the way. Let the small chart, Rinko chart, define your entries. This is what I teach every morning. And if you're not using this chart, why is it there? Why do you have a range chart? So let's go through. Strong triggers, everything says up, and you made a couple bucks. All of your triggers up. So you're looking for the white bar? Did you know that rule number 1 for that is you have to have a good top or bottom? That you have to have a termination condition with no triggers through? The only place on this chart where that was valid was right here. I know that trade well. I worked with John Novak during its development. This is the only place where that trade is valid, off the termination condition. So here you're going with the flow, could have been an easy winner. Here you're fighting the flow, you get stopped out. No, you didn't. You did pull off there. I'm trying to figure out your entries and exits. You went short at 94. You made a tick. You went long at 02. And it looks like you got stopped out at 96, which would be a loss. In at 94, you took one target, lost 6 points on the other two, maybe? I don't know. It's hard. And then you entered at 00, made 3 points. I'm not sure why the stop. Maybe that was your target. You went long against everything and got run over. And then you went short when it said down and you were able to make money. So let's do this. Do you have rules written out anywhere, Junior? Okay, cool. So when I capture this picture, if all you're trading is the large chart, right? Let's pretend like that's it. I capture the picture, and you're good at this one. You can get this one up. Hey, Jerry, have a good one. I'm excited to start crossing that threshold with you. It's going to be a lot of fun. So up here, Junior, it's so funny. You're Junior today. It's Junior 2 days in a row, not JR. I was laughing about that when I saw him enter the room. So up here, we got a lot of cool stuff. So the arrow, everything is click and drag. So if I left click on my mouse and I drag down a little bit, I get the arrow. So I can make this arrow as big, as short as I want. I can also click on it and, whoops, and maybe I want to change colors. I can make it yellow or whatever. I can come back and move it. There's these shapes, and I love these shapes because for you, rule number 1 is a termination condition. Rule number 1 is an area that stops the market for that white bar trade. So you can do the boxes. You can do a little box. You can do a big box. Once you release the mouse, the box is there. And then finally, we have the call out. So the same thing. We're going to build a box. I'm going to left click, and I'm going to build this big old honking box. And when I release the mouse, it's going to give me that little cursor blinking in there. This is where you're going to tell me why. So why did you enter? And I don't care if you say momentum, clear path, and entry. Maybe you're going to say, it was green, I went long, right? And then show me your entry and show me your exit. And what happens is, let me see if I can find on this chart where you did what you did. We'll look for the last trade. All right, so here we go. So if you take a picture, I'm going to do it with Snagit because I need some bells and whistles. And I like this. Guys, this is part of the learning process, figuring out how to communicate with me in class. So check it out. Don't think so, Rob. So Junior, here's your big chart and your small chart, right? So now we kind of have this double whammy. Now I can see what you're looking for on the big chart, and I can see what you're looking at on the small chart. So the large chart says trend down, red background. The large chart says not strong triggers, but the large chart says I have a clear path. So what I'm hoping for you guys is that you start to learn these very basic concepts: momentum and path, momentum and path, momentum and path. And then you said you're looking for the white bar trade, right? So the white bar trade rules, if you wrote them out, is first it's a term, then white bar off the term, fast triggers roll, pull back to the fast triggers. So that's the rules for the white bar trade. So if you go through the process of annotating your charts, you realize that you didn't have a termination. You realize there's your white bar. but you went short, not long. And the white bar trade is a counter trend trade. The white bar trade is that white bar off of a termination, and then you're looking to trade with everything, not against everything. Does that make sense? And I'm going to see if I can find an example on this chart where maybe it might have been true. So up at the top, here's your termination. Let me scroll over to your chart. Here is your white bar off of that termination, and it never gave you a pullback. And then when it retested the termination, here's your white bar off the termination. There's your pullback to the fast triggers that rolled. This was your short trade, Junior, right here. And look at that. It just keeps going. And this is why rules become so important. It doesn't matter to me what trades you guys take, but you have to know the rules for your trade, because the rules are what keep you from going long when everything says down. And then the rules are what keep you from going short when everything says up. So Junior, if I know you're working on that white bar trade, I want you to do me a favor. Where did it go? I want you to write those rules down for me. And I want you to practice writing on a chart. You can just put test. But if you know exactly what you're looking for, it's easier to find. I hope that makes sense. And what we were able to do, because you gave me both, that's your look. Your entry rules were met right here, and that market never stopped all the way down. And that's pretty cool. So Junior, you have to be able to identify a termination condition for that trade. That's important. You didn't take one trade off of the termination condition, so that's going to create challenges for taking the trade. So if you want, find a chart and just write your rules on the chart. Even if it's not a trade, Junior, do me a favor, take a picture of a chart and write your rules on the chart, because once I know what you're looking for, I can help you with it. But you're looking for one of the hardest freaking trades to find. You're looking for one of the most difficult trades that people screw up more than they don't. Even experienced users. There's an easier way. Wrong termination, everything rolls. Not quite odds favorable, but once it clears trouble here, you ride that small chart momentum. It's a Nexgen momentum trade. First, it's a termination. Triggers roll, clear path, pulls back to the one-to-ones with strong triggers, and that's it. It's a Nexgen momentum trade, and perfect execution. Ron's like, I'm not a one-trick pony, Mark. I can do more. I studied, I practiced, I learned these things. Let me show the kids. I appreciate that you do that, Ron. Morgan, weak top, odds favorable, no terminations, no divergence. Since the triggers are split, you wait for confirmation. Easy money. Great trade, Morgan. Nothing wrong with waiting for confirmation, guys. There is nothing wrong with forcing the market to give you what you want. And I lost my spot. Hold on. All right, Boaz. Momentum, path, entry, profits. Boaz, you are the most boring trader. You know that? It's the same thing every time. It's that darn momentum every time. It's that clear path every time. It's that beautiful entry every time. Better Dad, rock star. Termination, odds favorable, clear path, and you know right where that entry's coming from. Great job. And what did it do? It went. And you missed it talking about the chili dog. That's okay. We distracted you. It happens. But you nailed it. Even if you didn't take it, you know exactly what you're looking for and where. Great job. But you saw it, which means that you have the recognition, and now you're just going to keep putting that recognition into play. Weaker triggers, divergence, divergence, and Ron says, here's a pattern that typically goes to the reversal bar marker, and it did. And this fights trend. And this fights momentum. It fights every indicator down, ladies and gentlemen. But it's a pattern that Ron's detected that goes the other way. The same way Pete was taking advantage of things that look asinine to the new user. But to Pete, he's like, I've seen this 100 times, and it goes this far more often than it doesn't. It's the same thing. It's the exact same thing. It's recognizing a pattern and finding a way to capitalize. Great job, Ron. Man, we're trucking. You guys are killing it. Every time I say, tell me why. I'm sorry I do that to you, Morgan. That's funny. Odds favorable, nothing in the way, clear trouble, quick profits. And then look what happened, guys. It's pulling back to that trend trade. When the chili dog fails, a lot of times there's a trend trade waiting to happen. Great job, Ron. And Ron says $1,000 can be made on one lot. That's a $100 trade. On a 10 lot, it's a $1,000 trade, guys. Better dad. Odds favorable, then lost it again. Focused on clear path after yesterday. No problem. So let's do it again. Weak triggers, but a clear path, right? So better dad, what does it mean when you have weak triggers? I just want you to say it out loud when you look at it on your charts. Anything can happen, right? That's it. So anything happened. This little, I like that you've got it. You're like, okay, here we go. Area inside of triggers. Where does stops go? We're going to go through KISS plan. 4 to 5 ticks, right? So the top of those triggers were at 04, which means you could have been out at 05. At 05, you had everything you needed to say, oh my gosh, this trade isn't working. Does that make sense? And now I'm going to show you something amazing. Things people don't think about. Right on, that's okay. You're learning, dude. And simulator is where you make all of these mistakes because there's lessons. But so that is 6 ticks, which is 50, 25. So that's $75 difference between the correct stop and where you were stopped out. Are you with me? That's the difference between 4 to 5 ticks and 10 ticks. I want you to see this. This one trade, that one error a day over the course of a trading year is almost a $19,000 mistake. And it's not that you're going to make it every day, but if you think about that, oh shit, that was a $37,000 mistake over the course of a year. And guys, it's those small bites, it's those little increments, it's that understanding of where the market shouldn't go and being willing to take that loss, being willing to make your losses smaller, and eventually learning how to let your winners run. Guys, that's the difference. That's huge difference. I love the mentality, but once this is void of momentum, better dad, have you seen how Morgan, when his entry isn't perfect or something's not 100%, whoops, man, I clicked on the wrong one. I want to put Morgan on a pedestal because poor Morgan's had the crap beat out of him 1,000 times by me in this room. I'm going to show you guys something cool that you can do. Because we focus on advantages, you can say, if my entry, if my momentum, if my path is not perfect, I can insist on confirmation. A reversal bar in the direction of my trade. And the only thing that does, it doesn't guarantee a winner, but Morgan says I want confirmation because I want something to put my stop behind. I want them to say I'm going the direction that this chart says it's going, but since it's not perfect, I'm going to make them go that direction. So Better Dad, one of the things you could do is you could say, man, my momentum, dang it, get rid of those. My momentum isn't ideal. The look isn't perfect. I'm going to force a confirmation bar. I'm going to force a reversal bar to get into this trade. And in this case, it would have kept you out of the trade. But then it would have at least given you a fighting chance. And that's a little more advanced, but you're getting to that point quickly. Every day is good learning. Guys, I learned something every day in this room. I learned something with my brother every day. Every day I learn something. It's a lot of fun. Ron, the longer you're in this room, the more you appreciate it. Nexgen is the best. And Mark, oh, thanks. Well, he's Mark, and that's enough. Thanks. Knew nothing about stocks when I joined. I still don't know anything about stocks. Got blessed with 2 days in a row, 100% over $1,000 a day. That's amazing, Ron. And pretty cool, right? You don't have to know anything about the stock market. You don't have to know anything about futures. You don't have to know why it goes up and down. All you have to do is learn a pattern and you can find success. And then you'll create your own patterns. Yeah, but don't try to be Ron yet. Ron put a lot of work in to get to this point. You guys put that work in. And Junior, I'm ready for you whenever. I know you're typing, so we're good. And I can't believe it, but we've pretty much made it to the end of the day, haven't we? Nicely done, ladies and gentlemen. Great participation today. Awesome questions today. No, Junior. Junior, you're missing every rule for that trade. If all it took was a white bar, why would we have the other charts? So first, it's a termination condition. Then the fast triggers roll. Then you take the pullback to the fast triggers off the termination. So there's more to it. There's a lot more to it. Were you friends with somebody, Junior? Coming in, did someone refer you? No? Okay. So what you're trying to trade right now, and let me see if I can find it real quick. They've changed everything up here, so I want to try to find the video. There it is. Here's the link to John Novak's, the classroom that he taught on that trade that you're looking for. I don't know if you've seen this video yet. A lot of new users don't even know this trade exists. That's why I asked if maybe you came in with somebody else that knew the software a little better. Most people don't even know that one yet. So there is the video. Watch that video. Let me know if you have any questions, but that's actually my brother teaching that trade that you're looking for. And he goes through the whys, and he goes through the looks, and he goes through the entries. And maybe that'll give just a little extra structure to what you're looking for. And then in the meantime, and man, again, I don't make you guys do anything. It's all totally up to you. Maybe go through that document. Learn the very basic rules. Learn the easy trade. Learn the trade that wins more than it loses. And there's always time to add to it. There's always time to add to the trade. So, great class today, guys. I think that's it for me.